Good morning, good afternoon, and good evening to the rest of you. Welcome to another episode of Bitcoin Magazine Live. I'm your host, Q, coming to you yet again from my mother's basement, and I'm joined by my co-host, P. How goes it, P?
As always, it goes fantastically. I've got my serious jacket on. I'm ready to rock. We got some good stuff to talk about today.
Boom. Let's get right into it. So it is Monday morning, July 11th. I should probably know that because it's my girlfriend's birthday. Happy birthday. We have news and notes that we'll kick off in just a second. We have an interview with none other than the Foss boss himself in about 30 minutes. And then, of course, we have our BM Pro with market experts Dylan LeClair and Sam Rule at about 12 Pacific, 3 p.m. Eastern time. So we got a jam-packed Monday morning. But let's kick it off with news and notes. So I picked the best weekend, truly the best weekend to commit 24 hours offline. And let me tell you, I woke up and it was like the whole world decided to go into chaos. We're going to start all the way in Asia first, go back to Europe, come back to Asia. China, the bank runs have begun. Bank accounts have been shut down for a couple of months. Citizens have been up in arms and they have been bombarding the banks. Some protesters have now been getting attacked as well. This is a developing story out of China. Not to say we warned you, not to say we told you so, but this is probably yet another reason why we should just be separating the state and money, let alone having the state fully control your money in the way that we see out of China. My heart goes out to the people who are dealing with these issues. I hope those who have their savings tied up in these different banks are able to get their money out. And, never a better advertisement for Bitcoin than stateless money in this moment in time. P, would love your initial thoughts.
Honestly, I think you summed it up very well. We see this constant sort of perpetuation of the psyop that each country individually is trying to continue, which is to say everything is fine. Don't even trip, dog. Your funds are safe. In a similar vein, I forget the person's name, but the Bank of Japan recently said, like, don't even trip. Things are good. Market is fine. Super robust. And this is what we just saw with Celsius and Voyager and these other things that are happening in the sort of larger crypto ecosystem. And we should take note from that. Things are getting crazy.
I hope you guys have enjoyed my pretty face staring at my computer screen the whole time. Didn't realize you were still looking at me and not P's lovely bald head. But I digress. I want to just specifically highlight the fact that a lot of these protests are happening at the Zhangzhou, I hope I pronounced that properly, branch of the People's Bank of China. It's reported to have held up about $1.5 billion US. So this is not some insignificant amount of retail investor money. This is a significant chunk of change that Chinese banks are just flatly refusing to dole out. Not your keys, not your coins. Am I right? Should we anyways, let's move on now to the Netherlands and Europe. This is yet another developing story. It's been going on now for some weeks. We talked about it briefly last week, as well as Ansel and the FedWatch crew discussed it. But these protests of farmers out in the Netherlands are a direct result of the nitrogen limitations tax, however you want to specify, or whatever adjective you really want to use to describe what's going on. But more or less, the Dutch government is imposing some sort of a restriction on the amount of nitrogen that's being produced by these farmers. Nitrogen comes from everywhere, as far as the fertilizers, all the way down to the cow's piss. And that's really, I think, the crux of this whole issue is there seems to be a larger issue with just, growing livestock, having a cow, milk, meat, all of that stuff is now being put into question. I saw a very, very articulate response, which was, while this restriction, may pass through and may prevent farmers and Dutch farmers specifically to grow milk, to grow cattle, have their own milk and source it from their own homeland, they're just going to push that somewhere else to a different jurisdiction. And that jurisdiction may not have the right implementations and rules and regulations in place for proper farming etiquette or proper procedures as far as, I don't know, I'm not a farmer. This is where Alex would have been really helpful to like explain to me how you go from cow to the milk in my cereal. But the point being, their argument is you're not going to get rid of this. People are still going to want to buy beef. People are still going to want to buy milk. And if you're just saying we can't grow it here in our country and you want to just import it from another country and we don't know how that country handles or processes their food, you're giving your citizens a worse product and, quite frankly, a more expensive product while prices are already shooting up. So this is an out of touch policy, it seems, what, by lawmakers who may believe they have the right uh, incentives in mind and maybe doing things out of the goodness of their heart for the sake of quote unquote green energy and climate change. But you're ignoring present day. You're ignoring the fact that people need to eat today. The demand for milk didn't disappear. The demand for steak, beef, none of that has gone away overnight just because you enacted this law. So while out of touch policymakers continue to hammer home and pass legislation that doesn't necessarily fit what the citizens say, I mean, look, as an American, this reads to me like no taxation without representation. And last time I heard that slogan, a bunch of tea ended up in the Boston Tea Harbor. But I don't know. That was just the rumor.
Yeah, man. Chris, I'd love to hear your thoughts. You're muted, my friend.
Yeah,
Bull.
we'll get this at one point. We'll get this at one point. I don't know. I think we're just seeing like the chaos ensue across the place. I think Q keeps bringing this up. He's a wheat maximalist. When is it going to come up on the shores of America? I know we have the global reserve currency, but it's going to be interesting as it hits Sri Lanka, as it hits China, as it hits all these other places. When does it come home to roost at home? I know inflation's running hot, obviously, but I think the food thing is going to definitely become a more interesting thing here as these exporter nations or emerging economies have struggled feeding their own people. It looks very bad to not feed your own people while continue to provide food for the rest of the world, for sure.
Before we dive into the Sri Lanka of it, I do want to, you know, let me Americanize this for Chris and my fellow Americans out there. This type of policy that the Dutch government believes is in the best interest of its citizens today and in the future, in my opinion, is no different than the California government and even the fucking citizens that continue to pass and push forward legislation to increase taxes on gas, on SUVs, and then sit there and bitch and moan about how high the cost of transportation is as though they didn't realize what they were passing forward and pushing through. So, and the same issue, in my opinion. Fine. All of California is going to be, every California citizen drives an electric car. They pass this legislation, force it down our throats, and we did that. Guess what? The Los Angeles power grid isn't powered by nuclear. It's not powered by solar. It's not powered by wind. It's powered by fucking fossil fuels. So while I don't drive down the street and see the fuel burn in front of me, so therefore I just assume, oh, it's not burning. That's not how that works. You just simply passed that process to a different jurisdiction. That's what the Dutch are trying to do. They're just saying, hey, we don't want to contribute all of this nitrogen to the atmosphere, so we're just not going to do it. And it could go somewhere else. Someone else could be held responsible for doing that. And we didn't do anything wrong. We did right by our citizens. We did it for you, my cherished subject, my loyal subject. So it's the same thing. Like, oh my God, also, by the way, just so off topic, I will have a heart attack if Gavin Newsom runs for president, and not in a good way. That man should not be president. As someone who lives in California, I'm hearing this rumor circulate. For the love of fucking God, no.
Well, I mean, our beloved leader, our fearless leader, said he thinks Hunter Biden should run. And, I think it would just be even icing on the cake if he does.
That would be incredible.
Q, to your point, I think this plays in with California as well as any other country. So it's a contagion that people don't really talk about, but you don't realize what happens, but it's important. So right now, Sri Lanka or California, for example, they raise the taxes so they make it more expensive to buy gas for its citizens. And then all of a sudden, when the energy, they converted more to hydroelectric. That's what green technology they were trying to offset instead of using natural gas and or oil. But then what happens is, California runs into droughts, or in Sri Lanka's case, they run into shortages of food. So then you go from being a net exporter, or trying to offset your electricity, and now they have to go to Niagara Falls. They have to go to Niagara Falls, and they have to, or not Niagara Falls, Nevada, and they have to get water routed to their state in order to prop up their energy price. But then when you're doing that, is you're now being a net importer instead of an exporter. So California naturally exports a lot of their fuel as well. And to your point, Q, they have it burned in other locations. So instead of being like, look, we don't do it, but then you still need the energy. So then you need to import energy to offset it while exporting it. And it's crazy. You can make it much cheaper by just keeping it in-house or inside the state.
So you mentioned Sri Lanka. Q, what do you think? Are you ready to dive into that topic?
Yeah, let's do it. All right. So
take us through it.
This has been one of my favorite topics to pretty much bring up because it is rooted around farming. I've been warning that this is going to be a thing. And, I'm not saying that I'm some sort of future reading savant mystic, but
but you're strongly implying it.
I can predict the future, and I did predict
I fucking knew it.
So let's wind the clocks back a little bit. Sri Lanka's new president comes in, and what does he do? Massive tax cuts for everyone. Woo! This is great. Yeah.
And why did he do that?
Candidly,
it's because he wanted the PR boost.
I mean, this is a family presidential team. Apparently, his family has held public office for, I believe, if I remember correctly, it was 2004. They first got elected into office. So this is like a family that's like, he's the youngest brother of a former president whose dad was all like, it's a whole.
Yeah, there's 3 families in Sri Lanka that basically rotate through and control the politics. But I digress. I didn't mean to distract you. Keep going.
No. Like, thank you for that clarifying. Like, obviously, who's happiest when you cut taxes? Everyone loves it. Who doesn't love it when a domestic country cuts their taxes? The people that they owe money to, and all of this debt and all of the foreign bonds that Sri Lanka had, they didn't have the money to pay off these bonds. So all of a sudden, all the credit ratings on Sri Lanka's debt just got downgraded a shit ton because, hey, they're not making money because they're not taxing or collecting taxes from their citizens. Almost as if that's a revenue source for governments. So all of this is happening at the exact same time based on these ESG brilliant people, just like we're seeing out of the Netherlands right now. They come out and say, hey, these fertilizers that you guys use are bad, so you should ban them, and then we'll boost your ESG rating, and you guys will be more ESG compliant for more developing countries to come in and buy your debt, without failing to recognize the larger issue, which was they weren't collecting taxes to pay off the debt. So they listened to these ESG brilliant master degree minds, and they instilled this ban on certain fertilizers. They stopped importing them. This happened at the beginning of this year. And what happened when all of these farmers didn't have the fertilizers? They were harvesting a fraction of what their crops would grow per year. I think I used the wrong terminology for farming, and for all the farmers listening, I apologize if I offended. I'm trying my best to learn some new jargon here, so bear with me. So all these farmers now are growing less than half of the food that they're used to growing. So they're not only not even producing enough to sell, they're barely producing enough to eat themselves. It got so bad in Sri Lanka that they actually allowed government officials to take time off of work just to go home and grow food for themselves. Not cook, not meal prep, not just grow the fucking food, because that's how much of a food shortage is going on in Sri Lanka. So what happens when everyone can't eat? What happens when you can't eat? I'll tell you, I get fucking hangry. And what's the saying? Every single civilization or society is three meals away from a revolution. Chris, roll the tape.
Yep, I got it. Hold on.
This delay is
I
crushing.
lost it.
Oh, God. Okay, so
close.
I can play it right now.
Close.
Okay.
Hit it. Roll the tape.
These are the protesters outside of the presidential palace. They took it over the weekend. I mean, there have been videos all over Twitter and social media, people swimming in the presidential pools.
The president escaping on.
Well, the president has now unofficially resigned. The prime minister, I believe, has come out and said that he will officially resign, I believe, by next week. And Parliament should be putting someone into power. I don't care about any of that stuff, quite frankly. I think there's a more pressing and more important piece to this puzzle that, I forget. Honestly, it's Monday, so bear with me. But like, what's the name of people who predict the future?
Precogs, future people, psychics,
Terminators. Thank you. As your resident psychic, I'm putting on my, whatever that giant ball-like turban hat looks like. That's what I'm putting on. Sri Lankan parliament has been meeting with China. I've said for a long time now, China's biggest asset is not the money they have, is not the fact that every supply chain somehow starts in China for one reason or another. None of that. No, it's the fact that they have hoarded over a year's worth of wheat. And everyone laugh at me all you want. Wheat has an expiration date.
Wheat is not the answer for everything, Q.
You're totally right. It does. It expires. But that's why they have the incentive to literally move it that much sooner. And you have a country coming to China right now talking about how their citizens are starved, how their citizens just took over the presidential palace because there's not enough food in the grocery stores for them to buy. You don't think the Chinese government watched the same video that we just watched? I'm sorry, but you're about to literally see a country be sold for bread because they can't feed their own citizens. And I'm not trying to say it to sound like a cocky asshole to like validate my claim and validate my thesis. It's a country is out of food and they're going and specifically meeting with China. And they're meeting with the IMF to get more money. And they're meeting with India, and India has given them a loan to help pay off their bonds. Sure, that stuff is happening. And China may be giving them money as well. But you'd be foolish to believe that they're not also asking for food. They literally do not have enough food in the grocery stores. They are sending their own government officials home to go garden and grow farm for themselves. Don't go farming to sell, like farm because you need sustenance, you need food. It is really, really bad. And we are privileged to, not have to be there, not be a part of this. Chamath, I hope this is above your line because, you and your family won a lottery to get out of that country. I just wanted to say that. But I digress. I opened the floor up because I've been talking a long time about this.
No, man, you nailed it.
My last point too is what we see in Sri Lanka could very well be a precursor to what we see out of the Netherlands. The Dutch don't have some crazy like debt structure that they're dealing with, but guess who does? The EU. So what happens if the EU collapses at the same time as the Dutch farmers are growing food and there's no food in Amsterdam? Oh my God. Is there going to be no food in Amsterdam for Bitcoin Amsterdam?
That's FUD. Nope.
You heard it. Yeah, that's fucking FUD, man. No, but I think you also, you brought up a very interesting piece of this, which is the ESG portion of it. The ESG proponents basically drove what effectively, in my opinion, created this. It's essentially a hunger strike, not a hunger strike. It's like basically, as you said, people get super hangry and they're like, "Where's our fucking food?" And they storm the Capitol and Palace because of it. And I think that it is yet another example of how the ESG narrative, unchecked, can really lead to political destabilization, loss of life just from famine and lack of food. And this is a perfect example of why we have to be really careful about checking that and making sure that people are not pushing that narrative at the expense of human life.
Yeah, and this kind of ties into the thing that I was talking about California. So Sri Lanka, being an exporter, they're exporting their food. Now they don't have enough food to support their own people and export. So then they can't ship foods abroad and they can't feed their own people. So they need to be a net importer. And Q's point, their debt got went down, or so the interest rate on it is much higher in order to pay the same amount, and they are going to default on that. So they need to look for loans, and it's basically like this whole contagion effect that they now need to start being normally a next exporter of food now needs to import food. So then that puts more strain on the global economy as well. And then now a lot of bigger countries like China or the USA want to come in, or even the EU, and want to offer them money, but at the expense of the country's resources. So even if Sri Lanka were to stabilize and get more sturdy of their economy, they owe the resources to either a China, a US, and EU. So then they never get out of the poverty loop. And that's kind of what Bitcoin helps break, this chain of debt slavery, basically. That's what we talk about on the show a lot. I want to bring up something in the comments. Someone said, let's not just talk about the countries that are also currently just trending on Twitter that are also fighting for them. One of them being Argentina, another one being Lebanon, another one being Greece. Italy looks like they're going to default. Italy's in a better situation in terms of natural resources. But nonetheless, there's countries all around the world that are dealing with a bunch of these issues. So I'll kick it back over to you guys with your thoughts on that.
Yeah, I mean, Bloomberg posted something over the weekend, and I need to get the Bitcoin Magazine Bloomberg terminal. Whoever has that login, DM me, please. They have 19 countries in addition to Sri Lanka listed as potentially going to default based on, where they are economically speaking. These are 19 developing nations. So this is just the first domino that's going to fall. Like, I'm biased and partial to the fact that Iran has long been a struggling economy that just doesn't get covered by Western media a good amount. But say what you want about the ongoing conflicts in Ukraine and Russia, but that strain, however minimal you may believe it to be, is having a great impact all around the world. And you are not going to see this just stop here. This is going to get a lot worse before it gets better because, and here's a cold, hard truth. These aren't countries that most of the developed world loses sleep over. I'm sorry, but most people don't know where Sri Lanka is on a map. Most people don't know the difference. I'm going to be blunt. The average person, so candidly, probably no one listening, I hope, knows the difference between what the Dutch is or the Netherlands are, or Holland for that matter. So wait until, that's why I think we at Bitcoin Magazine were so up in arms with everything that happened with the Canadian truckers at the beginning of this year. Like, that's a G7 country. That is one of the most prominent nations in the world, and the Western world, I should specify. And the truth is, unless something happens to one of those countries, the rest of the G7 countries aren't going to react. They're not going to lose sleep. They're just not, unfortunately. And we've seen the EU in crisis for, quite frankly, as long as I can remember. Shit, when I graduated high school, I was backpacking around Europe, and that was the same summer that Greece was dealing with all of its defaults. And then a few years later, it was Spain. And I don't know, Chris, what's the next country other than the Netherlands between, I feel like almost every country at some point or another in the EU, I'm exaggerating, has gone through some sort of a financial turmoil that has strained the totality of the EU. So this is a very small domino that we will look back on, but we will only be looking back because it's happening in other jurisdictions around the world. And it really is going to be interesting when it happens to a G7 country. That is when people will pay more attention. And it's unfortunate that that's the case, but that's just human psychology. If it doesn't affect you, you're not losing sleep over it. Be honest with yourself.
Yeah, I mean, to your point, Q, I think the big, it's three, and I think it's four. It's Greece, Italy, Portugal, and I believe it's Spain. I could be wrong on the Spain call, but those are the big four countries in Europe or the EU, that they're worrying about default of their debt. And even Christine Lagarde is like, oh, maybe we could give QE for these countries, but everyone else has to tighten. And then all the other countries what the hell? Our economies are still collapsing. Why are we helping out these countries? So it's definitely going to be very, very interesting. And I could see a lot of infighting among the EU. And potentially, Brexit was the first domino to fall. I know it ultimately didn't go through, but And I know Greg Foss, he's coming on in just a few short minutes, talked about that Canada is going to be the first G7 nation to collapse. And this is coming from a guy that used to trade credit or debt for a living for 32 years. So definitely love to hear his insights on it. He obviously does not want this to happen, but he's like, the math just makes sense on paper. I guess I'll toss over to you or P or Q. Your thoughts on that? Make your call, P. What's going to fail next? Insect milk or Canada?
Oof, that's a real tough one. Honestly, I don't have a super strong opinion. I mean, Canada seems like it's on a dark path. That's for goddamn sure. You can only do so much with maple syrup before, bad things start happening. But certainly the COVID-based restrictions that they put in place are pretty wild. And the protests that happened with the convoy were super justified, in my opinion, and extremely telling. I think that we're going to see more and more of food and supply chain based protests happening, as we have seen in the countries we're talking about earlier. I think that's going to be the new normal. I think we're going to start seeing more and more of that, to Q's point and his psychic prediction, because he is a precog from the movie Minority Report. Yeah, Q, what do you think?
I mean, I want to bring it back to Bitcoin, and I think the real reason that I'm so annoyed that this is turning into the issue that it is the fact that we're listening to people who have no incentive to watch a decision get made in either direction. And the people who have no incentive are the ESG people, the people who tell you, oh, don't do this, like you're terrible. Like, fuck off. Fuck anyone who wants to tell someone else how to live their life anymore. Like, I'm just so done with it. And to bring it back to Bitcoin, it's these same narratives that I don't buy in Bitcoin are what lead me to not buy the narratives that, quite frankly, like I was a climate activist freak, for Christ's sake. Like, I'm a California libtard anyways. And when you start to see and you start to question the whole of their arguments, even just one point of their argument, once you see that hole in it, and then you start to pull at the string, and then you realize, oh, all of their arguments have this hole. Oh, all of their arguments are bullshit. Oh, nothing they fucking say actually means anything. There's no credibility behind their claims. So, fuck ESG. Let's go to commercial, and then we'll be joined by Greg Foss.
You are listening to Bitcoin Magazine Live. Listening to Bitcoin Magazine Live. Number one Bitcoin Magazine Live. You are listening to Bitcoin Magazine Live. Listening to Bitcoin Magazine Live. Number one Bitcoin Magazine Live. Sama.
Welcome back, and I'm very excited to introduce our guest today. You know him as Greg Foss. I know him as the Foss Boss. He has more experience in the financial markets than I do, years on this earth. He is one of the founders of Looking Glass, an educational platform to teach you more about Bitcoin. Greg, how are you doing, sir? Thank you for joining us.
Can you hear us,
Hey,
Greg?
gentlemen. Nice to be here again. Thanks for having me. I can hear you.
Absolutely.
Can you hear me?
We are back. We are
It's
rolling.
nice to be here with you.
It's great to have you, Greg. I want to first just get your initial thoughts on what you're seeing in the markets. It reads like a bear market. You see a lot of negative sentiment going around. Where is your initial sentiment at right now?
Quite honestly, I'm pleased the way that the ecosystem is cleansing itself. I want to give a shout out to some OGs that are just absolutely providing some incredible knowledge. Corey, for example, Max Kaiser. I might, I have my enemies out there who think that, perhaps, I keep repeating myself and whatnot. The reason I repeat myself is because, as you guys know, is because I don't think that things sink in as they should all the time. And I'm really, this goes back to the messages that Corey has been pitching for a long time. Same theme. Doesn't give up on that topic because he's worried that people don't absorb his teaching. Max Kaiser a little bit the same way. So the ecosystem has cleansed itself a little bit. There's probably more to come. There's never only one cockroach, as I've said. And couple that with a market that is absolutely on the head of a pin. When I say that, the TradFi market, don't get too far over your skis is my best advice. It feels better, but that's what markets do. They test lows. They'll retest a low. If we're talking Bitcoin price, they'll retest a thesis. So just the markets are not healthy. Any risk market, and although Bitcoin, I believe, should not be considered a risk market, it's trading as one right now. And until that changes, be careful.
Let's talk about, what I've coined the term spring cleaning in Bitcoin, and we're starting to see that. You mentioned a couple of people's, and there seems to be some targets on people's backs right now. Look, I've gone through my journey of maybe thinking that the toxic maximalism is a bit excessive to understanding its necessity and place in our ecosystem. Where do you fall in line of what is necessary to be said and where is it taking it too far?
Okay. I'm disappointed when some of our heroes fall. Sometimes they fall on their own sword, and sometimes they fall just because they have a business that they feel they have to defend, right? If you start a venture capital fund, just say that's in digital assets, but all of your focus is on the Bitcoin protocol, then your digital asset business doesn't appeal to perhaps some of the larger pools of money out there or capital. I'm probably referring to my friend who I was on Bitcoin magazine news desk down in Miami with Nick Carter. Listen, levels of Bitcoin maximalism are all in the eyes of the beholder. People are prone to mistakes, but they're also prone to a business model that perhaps you can't, if you're not the sole founder of that fund, you have to adhere to the corporate line, not necessarily to the Bitcoin maxi line. So where do I fall? Luckily, I'm, almost permanently retired, although I have my hands in a lot of different call them endeavors right now, including Validus Power. I will tell you that I believe as a whole that Bitcoin maximalism is very healthy because if nothing else, you talk about a group of individuals that will peel a number of layers of the onion versus a silly pension fund like the Caisse de dépôt et placement Quebec that invested in Celsius and said something as illogical as, we're investing in blockchain technology, but no, we will never consider an investment in pure Bitcoin. Bitcoin maximalism needs to call out that foolishness because, firstly, it's a wrong, and secondly, it indicates a level of intellectual laziness on behalf of the pension fund that that gentleman who made that statement should not be managing risk assets of any kind. And since I'm a Quebecer, born and raised in Quebec, and I still have family in Quebec, he's managing money on behalf of my family. And that quite honestly disappoints me because I don't think he should be managing much else than looking for a new job.
Ooh, I love it. I love it.
I want to ask you, we just finished up a conversation about the ongoing crisis in Sri Lanka, and it seems like a lot of it is rooted around the fact that their bonds got downgraded, they cut their taxes, they had leaders who just didn't know what the fuck they were doing. How did Justin Trudeau become the leader of Sri Lanka and Canada at the same time?
Oh boy. Well, here's something that's discouraging. And I don't mean to call out somebody with a math impediment, but Justin Trudeau has mentioned that he's very poor and is actually scared of math. I guess I draw the parallel that if you're scared of blood and you have really bad eyesight, you should probably not be a surgeon. So if you're poor at math and you're scared of math, I don't think you should be the CEO of a $1 trillion economy or a $1 trillion plus economy. So, here's what we know. What's happened in Sri Lanka? So Canada's a G7 nation and Sri Lanka is well down the pecking order. But the math is all the same. Regardless of the size of the economies, the total debt to GDP numbers are agnostic to the size of GDP. There is a logical argument that the staying power of a larger country with a larger GDP is better or has better staying power than that of a smaller country. But the math still works at a point in time. You cannot just go and raise money and assume that the budget will balance itself. Those are Trudeau's words. I'm not sure if the Sri Lankan minister said anything quite as infantile, but I would hope not. But then debt is a confidence game, right, guys? When you get downgraded, it very often starts a confidence, we'll call it a
cascade.
Yeah, or a whirlpool, right? It sucks the confidence out. And one, more difficulty, higher interest rates in attracting capital leads to more people saying, oh my gosh, there must be something wrong there, leads to more people pulling away from it. And it's a domino effect or contagion within the psyche of the lender. I think I've said this on your show before, but I better say it again. Debt holders or bond lenders are pessimists. Why? And this is where I spent my career. Some guy actually made a joke, make sure I say how many years I've been in credit for the bingo square. So yeah, fuck you guys. Okay, I've been in credit for 35 years. Here you go. There's your bingo square. Go pound sand. That's another bingo square. I've been there for 35 years. All I know is that these crises in confidence tend to build on themselves and then accelerate. The second derivative of confidence deterioration. And so Trudeau said the budget will balance itself. The Sri Lankan minister probably does not understand that you only have to mess up once in order to lose the pessimist's confidence, because bondholders, very little good happens with a bond. You lend money at 100 cents on the dollar, and if everything goes swimmingly, you get your 100 cents on the dollar back over a term of your holding period. Plus, you get a coupon rate that's a predetermined coupon. It's called a fixed income instrument for a reason, because they don't change it. If things get worse, they don't say, "Oh gosh, I made an error. I was borrowing from you at 5%, but because I've become a worse credit, I'm going to kick that up to 7.5%." That doesn't happen. Like, a fixed income contract is a fixed income contract. So you got the equity guys on the one hand that, they're so full of hopium, and, they're guys that think that trees grow to the moon. And then the flip side is you got the debt guys that are pessimists, because asymmetry of a debt investment is that, again, the best thing that can happen is you get your money back plus the coupon you were supposed to get. The worst thing that can happen is the company or country does not meet their obligation, and it goes into some sort of restructuring or default. Debt holders, though, run the world. Their markets are way bigger than the debt markets, are far bigger than the equity markets. They are the lender, whereas the equity guys are a subordinate claim. You got to understand what the debt guys are. They are the Grim Reaper, if you will. When they get upset, it's very hard to turn that around. So Sri Lanka, I didn't follow their story in, step by step, but a debt downgrade leads to loss of confidence, leads to another debt downgrade. It's very hard to turn that around.
Are there, in your experience and your time in the markets, have you seen a reversal? Have you seen a debt get upgraded?
Oh,
And what has caused, what were the steps needed in order to achieve that?
yeah. So, my history, again, I started as a junk bond trader, and there's two terms in the junk markets. There's falling angels, which are credits that start at a higher credit rating, and they fall into the junk category, if you will, or they start in the junk category and continue to decline. But then there's rising stars, and your job as a credit guy is to identify the rising stars and to avoid the falling angels. The rising stars are exciting, because imagine you can buy a company, I'm just going to throw this out, or a country that has a 10% coupon at time zero, but then over the period of time, they improve their credit metrics and improve their revenue streams and tax base, etc., such that 10% coupon, everything else being equal, inflation aside, that 10% coupon that was primarily a credit evaluation, you only needed 7.5%, everything else being equal. Again, the risk premium has declined by 250 basis points. Well, the price of that bond goes up. Now, if you cash that bond in at a higher price, because as the yield came down, the credit yield came down, the price of that bond went up, you're foregoing the future coupon that is a 10 coupon, but really only needs to be a 7.5 coupon. You're cashing that in. I say nothing good ever happens in bond land. Well, that's an example of something good happening. But now you are tasked with the job of finding another investment that is a rising star investment rather than a falling angel. So it's not easy. And most credits out there are falling angels. Why? Well, over time, leverage has been more and more accepted in the system, whether it's corporate leverage or government leverage. And as more and more leverage is added to the system, that's a credit metric that means worsening credit quality. Therefore, as you've seen in corporate land, corporations have gravitated towards a BBB average credit rating because it's more effective for their equity holders. Using more leverage can be more effective, enhance returns for equity holders. So, it's tough being a bond guy, because the equity guys accrue the benefits of increased cash flows and increased leverage. And the debt guys are the guys that absorb that penalty. And so it's always a bit of a push-pull. I hope you guys follow my little story here. The same thing can happen in countries, because Why do countries increase their leverage? Well, they can get politicians reelected. They can expand their economy, infrastructure spending, all sorts of things like that. The question is, where's the fine balance? And, I get in countless arguments on Twitter, unfortunately, because I take the bait, where people say stuff like, oh, JP Morgan's credit default swap is only trading at 95 basis points, which is less than, it's not where JP Morgan's credit default swap is trading today. It's how it trades relative to its history and the confidence in that market historically. Yeah, there's lots of worse credits than JP Morgan, but I cannot think of very many credits that if they default would have the impact on the world that a JP Morgan defaulting or even worsening in credit quality would have. Because why? Everything else out there would be compared to JP Morgan. It's again like the company that goes from a higher rated credit, AA, down to BBB. All of its competitors that try to maintain the AA credit rating are disadvantaged at an equity basis because, again, more leverage can increase your ROI on your equity. And after all, even though a CEO should be managing the capital stack for the benefit of all capital contributors, so debt and equity guys, he really only cares about the equity guys because he has stock options. I've never heard of a CEO that's had debt options on the value of its debt. No. Maybe it's something to think about. But they only ever have stock options. So what do they want to do? Increase the value of their stock. How do they do that? They play around with leverage on the balance sheet. And sometimes they go too far. It's like a drug. Hard to get off of debt. Once you've gotten that drug, you keep taking it.
Greg, sorry to interrupt. Your video is like glitching out. It looks like you're coming to us from the future, sent to protect the past.
I don't know how to do that. I've had problems with this before, this platform. I can change my camera to the other camera. Give me 1 second.
Let's maybe try that.
But I'll come in less clear. You guys care or not? That's probably a good thing for you guys. Let me check how I do this here.
Let's do it.
Because I've had this with this platform before, and
well, why you
here? Okay, so now I'm not. You can hear me. I just took my camera off, but
we can't see you at all.
Okay, settings. Here
Although
I go.
Your avatar is incredible.
I know. I'm gonna go to video.
Bear with us,
how's
listeners.
that, boys?
You're just seeing how the sausage is made.
Okay. See if this is any better. Hold on. No, it didn't. Now I'm on the different. Now I'm on a different one. So now I have to go. Okay, I'm coming back at you now.
Oh.
Why?
Let's try that one.
I see myself in the background. I see myself in the background.
All right, let's try switching back to the other one, and then we'll just keep going.
We go. So now I'm not going to be blinking, I don't think. Is that good?
We'll take it.
We'll take it. Let's
no, this is good. How about this? See, I'm not blinking. Am I blinking now?
No, this is great. Greg,
right.
I mean, I think that was one of the funniest things I've heard in a very long time. Just you don't have any debt options. You only have stock options, and for a good reason. You only get money for how a company prints money, not how the banks print their money. I want to pull up a tweet that you actually responded to us last night with, showcasing just the level of debt going on in developing nations and how over the last 17 years, we are at a new all-time low. For myself and everyone else who has not spent time actually in the bond markets, what is this saying to you?
So this is just emerging market debt returns, okay? And so this, the return in the emerging is the worst since 1990. 94, and it's the worst on. Why is it the worst? Well, the reasons. The US dollar is a global wrecking ball. I don't agree with Jeff Snyder on too many things. This is one thing I think we do both agree on, is that the US dollar, when a US dollar increases in value, which it's had a huge run, it wrecks emerging market economies, and consequently, people do not want to hold their investments in emerging market debt. You see this by the fact that there's been far more sellers than buyers, which means far more price pressure, and it's had its worst year on record. It's a combination of rising interest rates, but also it's a factor of the US dollar and attractiveness of the US dollar and unattractiveness of emerging markets. So every time the US dollar strengthens, we see these episodes. This year should not surprise anybody, except that it means that raising capital in these countries is very difficult. So you can't raise growth capital. In many cases, you're going to have more trouble rolling over your debt, and you will roll over your debt at a higher coupon, which means that the interest burden on that debt will be higher. It's a horrible time to be the CEO of an emerging market economy. Just ask the president or prime minister of Sri Lanka. He's experiencing it firsthand.
Well, so P's muted, so we can just ignore whatever he's trying to say.
God damn it. Okay, wait.
That was savage.
What I was going to say is, I'd love to hear you talk more about the DXY. Why do you think it's rising so rapidly? Does that spell, doom for the dollar, or does that show that there's demand for the dollar globally?
Yeah. Okay, so Jeff Snyder goes through all this euro dollar stuff and everything, and let's even break it down more simply. Yes, I agree on the euro dollar and the dollar milkshake theory and everything like that. So, but what I don't agree on is that you have to understand interest rates are an attractiveness of putting your money and leaving it in a dollar. So as the interest rate offered by the Fed Reserve is pushed higher, foreign flows are more attracted to keep money in the United States and consequently the US dollar than they are in holding it perhaps in their domestic currency and treasuries or bonds. JGB, the Japanese government bond, is exactly an argument for this, and the Japanese yen has been destroyed. Now, it's nothing more than something that's called interest rate parity. It's a very simple calculation. Everybody who's taken finance or economics 101 should learn that interest rate parity. But here's the truth, okay? And I've said this before. Sorry if I've said it on your show. All fiats are melting ice cubes. Yes, true. More importantly, the US dollar is just the best crack house on a crack street, okay? Everybody that has a fiat currency is addicted to crack. So big deal if you run the best crack house on a crack street, which is the US dollar, it's still a fucking crack house, okay? You got to get off the crack house. You got to understand, yes, dollars do debase. Don't listen to Jeff Snyder, okay? He's not that fucking good at credit. He might have all these other theories, but he just don't fucking know what he's talking about when it comes to credit. So at the end of the day, yes, all dollars debase. Yes, the US dollar is the best crack house on a crack street. It goes up in value against all other melting ice cubes. It's just that those melting ice cubes' rate of decay is faster than the rate of decay of the US dollar. It comes back to credit. It comes back to the fact that you have to print money to solve the debt spiral. Sorry, another bingo card, DEBT spiral, math, very simple, learn grade 11 math.
I want to talk about a different melting ice cube now. The Russian ruble, which as recently as I believe a few weeks ago now, was at a 5-year high. This off the heels of the most recent sanctions and the ongoing conflict in Ukraine. What do you credit that rise in the ruble's value in this period of time to be?
The rise of the ruble, or
Yes.
the cycle. Okay, Russia. There's two things. When you look at the credit default swap market for Russia, it had the highest probability of default amongst all the nations. The reason being is the reference obligation was a US dollar reference obligation, and people were fairly comfortable that the USA was going to restrict the ability of Russia to make a payment on their US dollar denominated bonds. But here's the whole thing about rubles and the strengthening and the fall. I'm not an expert in military conflicts when it comes to fiat currencies, okay? So I better be careful what I say, except to say that, Russia is an energy-rich country that has its oil and natural gas that is being paid for, in certain cases, in rubles. A demand for rubles to pay for oil and natural gas causes the price of that to increase. Therefore, there's definitely that factor that goes into play. There could be squeezes left, right, and center in terms of the ruble play. Let's not look too much at the ruble at this point in time, because I think it's difficult to draw parallels to other fiats. Let's look at what the fiat currencies globally are doing. I just saw a thing about the Canadian dollar is falling or plummeting. If you look closely, the Canadian dollar has fallen 1.9% against the US dollar this year. So yes, it's down, but it's the best performing of the countries that are in the DXY basket. Okay, it's performed far better than the Japanese yen. It's performed far better than the euro dollar in the basket of DXY currencies. Yeah, we have a CEO who's a buffoon. Okay, yes, we know that, but we also have oil and natural gas reserves, which, like Russia, people are giving credit, if you will, to Canada and the Canadian dollar for having those reserves.
It reminds me of an old saying that I used to hear when I was a kid. When you compare bad to worse, bad is always better. So it looks like we're focusing on the bad fiat currencies versus the worst fiat currencies. Um, I want to. We're going to speculate a little bit, and I hope you'll entertain the conversation. I'm curious what your expectations are should the Japanese yen collapse and be completely and utterly worthless. What happens to the rest of the G7 countries? How do they respond? And yeah, let's start there. How would they respond if the Japanese yen or just any of these G7 country currencies were to collapse to zero?
So, big question. It'll never go to zero because there will be ebbs and flows that, it doesn't just crash to zero overnight. And my opinion would be that there would be a global bailing out of most G7 countries. Canada could be on that, but certainly Japan. I think there would be a global central bank intervention that would cause support of the Japanese yen. We've seen this in the past. So look, it's a process, right? I mean, the Japanese yen is plumbing 25-year lows. Euro dollar's almost at parity, but it's not like they're going to go to, we got to be careful what that word worthless really means, because worthless, let's borrow on what you just said, bad versus worthless is almost worse, then bad will be better. But that doesn't make bad better as well. Or bad good, I should say. Let's focus on what fiat currencies can do to sort of arrest the decline in their attractiveness. Some things they can do is put hard assets on their balance sheets. Many of them hold gold. Canada holds zero gold. Okay, we made such a great decision years ago to sell all our gold. I'm saying that as a joke. Would it be wonderful if Canada put Bitcoin on their balance sheet? Yes, in my opinion, it would be a great move. Somebody telling me I'm green here. That's good. And someone said I need the term for the kids for my bingo card. So I love your comments on the side here. This is good stuff, guys. So for the kids, there's your bingo card. Sorry, I'm looking green. But here, getting back to the task at hand, putting Bitcoin on any federal or central bank balance sheet would be a great decision, in my opinion. That would arrest the decline of the fiat. Why? Because you have hard, perfect money or store of value. I like to think of it as digital energy, backing the, not backing 100%, but as a hard asset backing your fiat. So if that happened in Japan, I think it would be miraculous. Are they smart enough to do it? I have my doubts. Is Canada smart enough to do it? I have my doubts. But you know who is smart enough to do it? And I don't defend this man's actions in any of his military, but Putin is smart enough to do it. And if Putin starts pricing his oil and natural gas in Bitcoin, I think US treasuries lose US reserve asset status, and Bitcoin becomes the de facto global reserve asset. Because I think there's other oil and natural gas producing countries that would do the same. After all, the US dollar has an incredible advantage for US citizens, because when they can print US dollars, essentially they're printing energy. Bitcoin is digital energy. As an engineer, it makes sense for me to price oil and natural gas or natural resource energy in digital energy. It's a part of the first law of thermodynamics, which is the rule of conservation of energy. So, some big words, big aspirations. At the end of the day, it's not a 0% probability. And within my lifetime, I'm very confident that there will be countries that are pricing their oil and natural gas in Bitcoin.
So I think there's something really interesting that you said there, and it's the idea of pricing oil in something other than the US dollar and what effect that will have on the dollars and its place in the world. And Putin did that. Putin flatly said, I do not accept US dollars for our oil, and they priced it into the ruble. And I personally believe that what we've seen in the ruble and its value now being higher than what it was before the invasion of Ukraine, reaching levels that it hadn't seen in almost 5 years, sends a message to me that, by tying your national currency to your main export, which is oil, maybe not your main export, but a vital global commodity, has now strengthened your currency. And to your point, why wouldn't every other oil producing nation see that and consider, hey, wait a minute, their currency got stronger as a result of this. If we want our currency to succeed, why would we not follow suit? Then the question becomes whether or not they want to have their own currency. I want to unpack this a little bit more if you'll entertain me, because I think we're bearing witness to a moment in time that our children or our grandchildren will read about in history books that we may not recognize what's going on and the importance of the petrodollar as far as the US dollar's place as the global reserve currency. What does a world look like without the US dollar as the global reserve currency, in your opinion?
We need to be careful to define the difference between a global reserve currency and a global reserve asset, right? I honestly believe there's room for both. Michael Saylor believes the same. Fiat, let's define what fiat is good at. Fiat is good at eliminating the need for barter. So you don't have to trade a certain number of, automobiles for an airplane, etc. Cows for ducks. You have a price on a product, and you don't need to change fractions of another product into that product, or can just do it via currency. So that's what fiat currency is good for, is a little harder. It facilitates international trade. What is it not good at? Well, in my opinion, it's not good at storing value. That's where Bitcoin comes in as a reserve asset. And then when you tie the two together, in your natural resource equation, and you eliminate fiat, which has no store of value, versus natural resource energy, which is a store of value. If you trade one store of value for another store, that makes sense, in my opinion. So again, natural resource energy for Bitcoin, a store of value for a store of value. I like to think of Bitcoin as digital energy. That narrative doesn't go everywhere, but I like it as from an engineering perspective. So let's differentiate a reserve asset from a reserve currency. And the reserve currency was basically, awarded to the U.S. In the petrodollar system in a trade for Saudi Arabia's military action, as long as they priced their their oil reserves in U.S. dollars. So hard to say, guys. Yes, it might be. I believe it will be a change. Changing. I think,
Greg, I think we're losing you.
I think that it will happen, but like everything, 13 odd years.
No.
Fine.
Q, can you hear Greg okay?
No, it's so spotty right now.
Your internet
think
is
we're
cutting in and out.
We're talking so
Am I
deep
still-
into this that
I can hear.
Yes.
Is it?
I think it's better now.
Yeah. Oh. Keep going, Greg. You're on a
That
roll.
if it's my. Tell me if you can hear me.
We can hear you.
Okay, I'm going to put my camera on blank, or I'm
Okay.
turning
Go for
my
it.
camera off.
You're
All right,
just gonna
hopefully
see
that'll be
P
better.
in mine's.
All right. Hopefully that will use up less bandwidth. Can you guys hear me?
Yes.
Okay, good. So here's where I was, and I'll almost finish that thought. There's a big difference between a global reserve asset. Okay.
I love that clarification and that explanation. I want to unpack another thought though, and we'll separate the two ideas. Firstly, what effect or how can Bitcoin help countries improve A, the performance of their bonds, and B, just the value of their currency as a whole? I think we all know the answer to the second one, but I do want to separate these two and give you the opportunity to comment.
Come back to us, Greg. Oh no.
Sure.
Greg, we can't hear you,
Right, if you-
unfortunately.
Issue. It's much like having good. I'm not saying you have to use Bitcoin as collateral, but when you make an evaluation of the credit quality of account, you look at the value of the assets on their balance sheet. So let's think of that. If as Bitcoin balance sheet, I think improves the attractiveness of the borrower. Yet, no, it does not produce cash flow. What does it do, though? It stores energy, if you will, for consumption in the future. Would I want a central bank or a company to have 100% of its loan to value in Bitcoin? certain lenders that would. I don't think the global community would allow that, but certainly would take that trade at a certain level of value. So, not like anything else, guys. It's a hard asset that will increase the credit attractiveness of the borrower.
We're gonna keep going down this unless
Go for it.
okay. We have a Fed meeting here in America in about 2 weeks. I know that for some reason now these have become unofficial financial holidays all around the world. Let's talk the Fed. Let's talk the U.S. domestic policy for a little bit, if you'll entertain me, Greg. What are your expectations for the Fed? What they may end up doing, and what you would like to see them do that they will inevitably not do?
I think we've lost Greg, unfortunately. Q, why don't
There's
tell
a
us your...
tweet that went around from LeClair.
You're back. Wait, we lost you for a second, Greg. Is there any way you can move to to better internet?
Streaming is hard, guys. Sorry. Let's try it.
If there's a way you can get better internet.
Did I lose you guys now?
No, we're losing like every like third word. Unfortunately, it's really hard to understand you. Is there any way you can move to better internet? We don't know.
Maybe I better. Yeah, it's painful. I just want to hear Greg teach math. Thanks, guys. Let's. What should we do here? Can you do a hotspot? I think it depends. Let me try and.
Well, while you do that, Q, let's you and I talk about some of the things Greg has said, and then Greg, once you switch it over to the hotspot, we can pull you back in, chat us on the side in the private chat, and we'll go from there. Q, give us your thoughts.
Oh my God!
As always, Greg Foss is a fucking boss and has been dropping knowledge bombs nonstop. I've said basically nothing this entire time, which is the highest compliment I can pay anyone.
Honestly, this is so true. If Pete talks over you, then you know he doesn't really care what you have to say.
No. It's the opposite. It's the opposite. I do talk over people because I get excited too. But when I'm just speechless, I'm just learning so much. But let's dig in. What are some of the things that Greg said during this conversation that really like sparked something for you specifically?
I think for myself, I'm not as familiar with debt cycles and just the way credit ratings go. And the way he explained the psychology behind, the downgrading of the debt is almost like this inevitable downward pressure that will lead to further downgrades. The explanation of that is not rooted in math. Actually, if you stop to think about it, it was all human psychology. It's a fear trigger that happens after something that is mathematical comes into place, and then human emotion sets in. And once human emotion takes over, you have to throw logic and reasoning out the door. And so we're at that moment now where human emotion is taking over a lot of decisions. So as logical as we want to be about certain things, I think it's also really important to recognize human emotion is going to be the final verdict for a lot of decisions being made here.
Interesting. Yeah, I don't. Yeah, as you said, I don't know much about the debt cycles either. I don't know how much of it is based on human psychology. I think obviously, as you said, a lot of it versus the math, so to speak. I think there's a lot of math involved as well. I think countries are literally just watching for certain parameters or dominoes to fall, and then basically it changes the environment for everyone.
I do think there's also we were in the middle of this conversation when we started losing a lot of our signal, but I've said on this show, and I've not been given any information to make me change my mind or my conclusion that Putin's actions of essentially removing Russia from the petrodollar system and introducing the I believe it was petro yuan that Saudi Arabia is now pushing forward, or I'll call it the petro ruble. But that action had such a direct impact on the value, of the ruble on the global marketplace that I don't I'm hard pressed to understand why any other oil producing country would ignore that course of action. Mind you, there are very few oil producing countries that want to have a strong, or want, I think is the wrong word, but that have a currency that has a place at the head of the table. Mind you, America produces oil, Canada produces oil. Like, there are G7 countries in that sort of category. However, the amount of oil that is produced out of the Middle East versus with the limitations we have here in America now, it's drastic. And you've introduced a point of weakness in the dollar that outside nefarious forces can and eventually will take advantage of. So this will be a very very interesting, I think,
Period in
thing
human
to-
history.
Yeah, like, my kids will look back and read a history book and they will be like, why did the US government do that to Russia? Like, that will be how history will look back on it. Like, we've essentially validated everyone's worst fear about holding dollars, which is if you do something that pisses off the US government, they'll just say your dollars are worthless, strictly based on the fact that you did something to piss them off. It's like,
You're talking about the sanctions?
to a degree, yeah, because they put sanctions over all of the dollars that Russia held on their reserve. So now all of a sudden, whatever dollars they had, gold and other stuff as well, but all the dollars they held in reserve, worthless now. They've essentially said, like, this is not worth it. You can't touch these dollars; they're contaminated, and you can't send more dollars to them. So what do they fucking do? Fine, give us gold, give us rubles, or give us Bitcoin. I don't care. Don't give me dollars. I don't want dollars that I can't use.
Yeah, they did an interesting thing there, which is they require, correct me if I'm wrong, they basically just, as you said, required everybody to pay them in those other forms of value in order to basically shore up their own currency, correct?
Exactly. And so that we're watching it play out. That is
I
not
think
fully transpired. And that's why I could like, it makes me so uncomfortable that even with the decline in the last 2 weeks of the value of the ruble, it's still above the pre-Ukraine invasion levels.
yeah, it's that is fucking incredible. The entire world, or much of the world, is trying to, put their boot on the neck of Russia via financial instruments, and it's currently failing. What just happened? Oh, my friends, apologies for all the technical issues that are going on. I have no idea what the fuck is happening. We're going to get it fixed. One of the other things that I really wanted to ask Greg, which we didn't get a chance to, is talking about, sort of inventories are rising, gas prices declining, copper, wheat, cotton, oil, all have been on a decline since their highs earlier in the year. And I wanted to ask him, and I'm curious what you think, what does that mean for CPI inflation prints in the next few months? If we see...
Oh, I mean, to be honest, I think it was...
Wait, hold on. Greg, are you back?
I think he is back.
Okay, we can't hear
Can
you
you guys
yet.
hear me?
Yes, we can hear you. Incredible.
Any now?
Yes.
You sound all right.
Now it works.
Okay, I'm
So I
on
was
my
just-
ISO huge network outage.
Whoa, you said there's a huge network outage?
So I apologize if it's. Can you guys hear me though?
No, we can hear
Yeah,
you
that
good.
was
You're
on the
good.
weekend though.
Interesting. Well,
And-
let's just dive back in.
Can
I
you
was
guys
just asking.
okay? Ask some questions. Yeah, there's some delays, but go ahead. So
So I asked Q a second ago, we're seeing these, I'll just repeat it, inventories rising, gas prices declining, copper, wheat, oil, all have been in decline since their highs earlier in the year. And I'm curious what you think that means for CPI inflation prints in the next few months. And if we see CPI cool off, to even 4 or 5%, do you expect the Fed to pivot?
I actually do expect the Fed to pivot. Larry Lepard sent out a good, a great tweet today where he quoted, I think it was Walter, drawing a blank on the guy's name, somebody where Larry Lepard pivot incoming because they did a bunch of the Fed governors is saying that there'd be a risk of raising rates too quickly. It's the only thing that makes them. You cannot get a global fiat Ponzi. You cannot taper a Ponzi. In words of Max Kaiser, in the words of other people. Did that clear?
You cut out a little bit, but we got the gist. You're saying, Fed Ponzi, as Max Kaiser has said.
It feels as though it seems as though, Greg, and correct me if I'm wrong, this is an inevitability of the system the Fed created, that they will have to either reverse their stance, pivot, and start pouring liquidity into the markets. Otherwise, we stand to see a far, far deeper crash than possibly any of us have ever seen in our lifetime. Is that a fair assessment, or am I being too grim?
Oh, Greg, I don't think we can hear you. We may have to cut the
I
interview
agree with
short,
that.
I'm afraid.
Q. One of the problems, a change of the inflation target. Okay. I think that there's a large chance that the Fed will target for annual to 4% declare victory on the inflation fighting front, because the math doesn't work. You need to supply liquidity. Potential depression. Yes, you were right with your gut instinct. A potential depression.
Do you think? And I am of the stance that the Fed just doesn't have the stomach to go through that depression, and they will inevitably just have to print money. But how much unwinding is necessary, in your opinion, for the Fed to undo the chaos that is? Or does everything need to, like, let me rephrase this. What scenario should we be rooting for? Should we actually be rooting for the Fed to just unwind and us go into this deep depression so that on the other side things actually are fixed? Or should we just be rooting for them to absolutely destroy the dollar, print ad nauseum to a point where there is no other viable solution other than Bitcoin?
Greg, I think we're gonna have to cut the interview short. Your signal strength is only 2 bars of life out of 4.
The Matrix got him. We were talking about too much
Yeah.
high signal stuff.
Yeah.
Greg, I will text you. I'm very sorry about this. We'll figure it out and we'll get you back
Okay,
on
guys,
when the internet fixes.
We can't hear you. Greg.
Okay, guys, I apologize. Thank you for having me.
No
If
worries.
you can hear, let's get straightened up.
We heard
Thank
that
you,
part.
fellas. Don't
we'll have to
forget,
have you back
you
soon.
cannot taper Ponzi. You cannot taper. Thank you, fellas. I'm really sorry. Sorry about the.
It's all good. My bingo card just hit. I got all 5 of the big Greg Foss catchphrases. So you lost, I win. There we go. Foss, sorry that we couldn't have you. Hopefully the Matrix doesn't get you. And this is what happens when you talk about legit stuff. They just shut your internet down.
That old chestnut. All right, so where do we go from here? I think, Greg gave us a ton of really interesting fodder, as always.
Let's talk the CPI stuff, because CPI comes out this week. And yeah, Chris, come join us. We're going to do extra log news and notes. So let's talk CPI, because I believe it was Ansel who brought this up with one of his guests, where they said they stopped paying attention to year over year CPI, and they pay more attention to month over month. And I've started to understand why, especially I think last year in particular, those numbers were a little off because you're basing it off of 2020 numbers. So like everything looked insanely inflated. But now when you start to see those year over year inflation numbers where they are, it starts to beg some more questions. And especially if we start to get readings of a whole percent on a month over month basis. Now, mind you, all of the CPI numbers are just bullshit at this point. I don't need the government to like claim, oh, the price of meat is only up. Like, no, it's not. I'm paying twice as much at the butcher for the same cut of meat a year ago. I'm paying 3 times as much for milk than I was a year ago. I'm paying 3 times as much for gas than I was a year ago. I'm paying twice as much for eggs than I was a year ago. So I'm reaching this point where I only pay attention to CPI on the basis of this is a number, a metric that decision makers and policymakers are using to guide their decisions. However, if I believe this number is flawed, then by the transitive property, any decisions made off of this flawed number are also inherently flawed. So it's like I spent too much time realizing how stupid everyone else is in the world and how stupid I am. So like
I was
I'm
going
by
to say,
no
you're so humble about it. That's
I'm,
the thing.
I'm by no means absolved from this, but I've gotten to this point where I'm like, I just really like this is the best we could do is like lie to our fellow man that like it's not that bad out there.
Well, I mean, you know, the reality is, of
Mind
course,
you, not us. We don't lie to you.
don't lie to me. Don't lie to me, Q. Don't tell me you love me if you don't mean it. I mean, look, as I think you said earlier in the call, the CPI is a manufactured statistic. It is used, the government is super heavily incentivized to keep that number lower than it actually is. And there's a lot of metrics that have been created, you know, over the years in order to try to more effectively measure inflation. There's the Chapwood Index, which I think their site is down these days, but that's a really effective way. It's sort of a recharacterization of the basket of goods that are used to judge CPI because the CPI changes over the decades, right? And there is a very reasonable argument to be made that like, oh, you know, there are things that need to be swapped out because the average person is not actually buying those things on a day-to-day basis, but also the CPI is explicitly designed, or it is calibrated such that it, you know, again, produces lower numbers than actually are reality. So you should always view the CPI as undercutting the actual inflation numbers. Another great site that I love is Shadow Index, the Shadow Index. I forget the exact website, but if you just Google Shadow Index, which I'm doing right now, so I can give you the actual URL. Shadow Stats, that's what it is. Shadow Stats is a...
I'm going to put us on the spot. I hope the Chapwood Index works by Wednesday, but Wednesday is when the newest CPI numbers will come out. So unless there's something crazy that happens between Tuesday and Wednesday that we can't cover on news and notes tomorrow, I'm going to say our news and notes segment on Wednesday is going to be us going through the Chapwood Index and the latest CPI numbers. So stay tuned for that. Chris, I can just see the heart attack that you're having, hoping that the Chapwood Index actually is working by Wednesday.
Yeah, the Chapwood Index is not working. I just looked into it. You can only log in with admin rights. This is the shadowstats.com though, showing the money supply, the M2 money supply as it went parabolic and was delisted from the Fed. I don't know the granularity with their charts. It looks like they go further because I think it was suspended of April of this year or last year. I forget that the M2 money supply they stopped reporting.
I believe it was last year.
Yeah. So it looks like they go further. They go into 2022, which is interesting.
But also, I mean, to be clear, what they said is like, oh, the M2 no longer makes sense. So we're doing the M2SL, the sort of modified version, which just happens to show lower numbers. It's like, come on, bro. We know what's really going on. I also just want to share my screen, which has let me pull this up, the shadow stats for CPI numbers, and is pretty interesting to look at as well. So again, this is shadowstats.com. It shows the CPI as measured as it was originally created, and then the the sort of version that we are currently using. And so you can see the divergence, which is extremely significant.
It's also, I think, it's tough for me to digest these numbers when, like, I got into this debate last week with my uncle just over the idea that the government officials create these metrics themselves. They can change both the inputs and the outputs and the way the inputs are calculated to alter the output. And then they come out and tell us, hey, we're making our decisions based on these numbers that we get to manipulate. Oh, and by the way, if we make the wrong decision, or if we interpret these numbers incorrectly, or if the numbers that we provide are just incorrect, no one's held accountable. And so you're able to just make outlandish claims and statements, and like, you're not held liable. Like, you're the CEO of a fucking company. If you submit incorrect earnings reports, you get fucking dung up for fraud. Ding, ding, ding. Michael Saylor, did I just fucking like give you a flashback to what happened to you? Like, Jerome Powell is doing that. But like, I'm not over the fact that he has the audacity to sit in front of Congress and just flatly say, we were wrong. And no one has the audacity to say, cool, well, your mistake just cost Americans their ability to pay for their homes, the ability to put food on the table for their families, the ability to pay for gas to take their kids to and from school, to go to and from work, to go see family and loved ones. Like, it's the lack of accountability is the larger issue at hand, in my opinion. And to ask people who make the rules up to hold themselves accountable is like giving a toddler unlimited access, or your 5-year-old kid, niece or nephew, unlimited access to TV, soda, candy, pizza, whatever else, and tell them you only get 1 hour of TV, 1 slice of pizza, 1 can of soda, and 1 piece of candy. But no one's going to be here to supervise you, and we trust that you do it right. And then you come back and you see the whole box of pizza eaten, all of the candy gone, 2 cases of soda on the carpet, and a couch completely torn up. And when you ask the kid what the hell happened, I messed up. You punish the kid.
Well, I mean, yeah, I think what you're talking about is it all goes back to the incentives, which, you know, again, I say this, every second, third show we do, but the thing that is so powerful, one of the things that is so powerful about Bitcoin is that it creates incentives that basically when you do what is good for you as an individual in the Bitcoin network, the system is designed such that it also benefits the larger network. And that is a very, very powerful thing. You never want to be in a situation where you are relying on human morality or human good, or you have to trust another group, or you have to trust another person in a position of power to basically make you whole and be good to you and to not abuse their power. Because the reality is, power corrupts absolutely. All of us, we have to recognize that in ourselves too. If we had the power that the central banks do, we would probably eventually succumb to that siren call and start fucking things up for other people because it's too easy. So you need to have systems in place that have maximum accountability for the actors in those systems. And Bitcoin is an extremely powerful tool for many reasons. But the thing that is so compelling about it to me is that aspect of it. And I think anytime, to your point, Q, we have these larger systems that exist today that are not based in something like Bitcoin. Bitcoin is obviously the answer. You're going to just see this behavior over and over and over again.
It's accountability, man. We need more accountability in our public officials. Like, I'm done with it. I'm done with seeing. There was I come from Hollywood, and there was always this joke you used to say where it's only in Hollywood or in sports where you can get fired for doing a bad job and then somehow get a fucking promotion. And there's a caveat to that saying where it's also true in politics. You could literally fuck up the entire economy and then somehow still get hired for Treasury Secretary. Yeah, I'm talking about you, Janet. I'm talking
Shots
right
fired.
about you.
Shots fired. Yeah, man. I think it's not only limited to those specific fields. I mean, we see that in business. I worked for the federal government in the health industry. I worked for the VA and UCSF, and the reason I was like, "Fuck this," and became a software engineer was because, as Bertrand Russell likes to say, academic politics are so vicious because the stakes are so low, and give people power, they fuck it up. But let's talk about. Let's shift the conversation slightly. What else should we dive into, inspired by the conversation we just had with Greg Foss, poet, mastermind, math expert, Greg Foss? Q, Chris, what are some other points that were particularly cogent and interesting to you?
I just want to quickly pass along. Greg wanted to apologize to all the audience. Unfortunately, with all the internet issues he was having, we will have him back soon. Chris.
I guess my takeaway from all this is everything besides Bitcoin's a shitcoin. I mean, it looks like, bond market blowing up. He said the US dollar is the best crack house on the crack street. And I think he just made a lot of good points with that. I think the safest thing this is me, not financial advice. I guess we haven't said that yet today. It's the safest place I feel putting my time and energy into it. And a lot of people are like, well, don't you look really dumb in the last 7 to 8 months? It's gone nothing but down. But that's like a bid on the fiat currency. And part of the reason that it came down is other people bootstrap themselves to this and they are forced sellers because of liquidations and contagion. But I know I am a way of protecting myself from debasement. What I mean by that is right now the Fed is tightening monetary policy and other people were irresponsible with basically customers' assets and they cause a bunch of people to lose money. But I am hopeful that, Greg always says, you can't taper a Ponzi. They're going to have to reverse course at some point unless the whole system breaks apart. And in doing so, they're going to have to print a bunch more money, is what I'm betting on. And when they do that, it makes each US dollar unit of Bitcoin, whether it's Satoshi or, 1 Bitcoin, whatever it is, more valuable. Go ahead, Q. What are you?
Q is cackling because he just fired a shot across your bow on Twitter.
I love you, Chris. We have fun here at Bitcoin Magazine. What can I say? If you're not first things first. If you're not following the Video Bitcoin Twitter handle, you should do that. If you're not subscribed to this channel, you should absolutely do that. Sorry, I was just having too much fun over here.
Okay, so what else? Let's talk about additional current events. What else happened over this past weekend that's worth going into and mentioning specifically?
I mean, we could keep going down this rabbit hole. I think that Foss has provided us. We're going to inevitably see another rate hike in 2 weeks. And one of the things that we were trying to have this conversation until the internet decided, no, you can't have these thoughts, was the idea that there's one of two scenarios and ways this plays out. Either someone in the Fed group balls over the weekend and they will just fucking crater the economy, raise rates to insane levels, insane but necessary levels, in order to unwind as much liquidity, and the liquidity being all the shitty bonds that they've been buying up for years that are coming due. Instead of going and rebuying these bonds, they're going to just let everything fall off the balance sheet. They're going to, I forget the exact term in bond trading of what it means for when a bond comes to
maturity.
Thank you. It's Monday, guys. Cut me some slack. So this will be a very interesting turn of events. And I want to, we've talked about certain issues before on the show, like UBI or the student loan repayment stuff. And there are two routes the federal government can go at this point in time. In my opinion, it is black or white. We're going to make it black or white. You either go all in on this excessive printing and you introduce UBI and you pay off and waive all of the student loan debt, all of it, all of it. And then you pump more money into the markets and you continue to print money, and every fucking group that cries gets $1 for every tear they shed, whatever bullshit you want to introduce. Or you reintroduce something far worse than the Great Depression. Like, that's how bad it can get, because you are not unwinding liquidity just from 2020. You need to unwind liquidity from 2018, from 2016, from 2013, from 2008. You need to unwind all of that liquidity. And as you are doing that, you will inevitably, unfortunately, have to undo everything done before that as well. So you either have a lot of downside, which they won't do, or you have perceived upside, which is what they will do. Here's where it gets interesting, in my opinion. Tinfoil hat. As Bitcoiners, we should actually just say, fuck it. You want UBI, you want to pay off student loan, you want to just print ad nauseum, go for it. You want to eat all the fast food in the world. You want to poison your body by smoking a pack of cigarettes a day, go for it. Like, all roads lead back to Bitcoin. And in my opinion, the excessive printing gets us to Bitcoin faster, and probably, don't quote me on this, I will say I was wrong if I am wrong. I do believe there's a possibility that it could lead us to a real reshaping of the system. Because if they do let the markets crater and they do try to unwind everything that they've done for the last few decades, they will feel like they're validated. They'll feel like they learned from their mistakes. Rather, I would just fuck everything up, completely and utterly destroy it all, so that we can start with a far different system. So, black and white, which would you prefer? P, crater the entire system into a depression far worse than the Great Depression, or create a period that is perceived glorious, but will only be like the final dance. This is the encore.
Yeah. I think it's got to be the second one, right? Like, we don't, like, as much as Bitcoiners love to be like, yeah, burn that motherfucker down. Like, I do not want to see everything collapse. I do not want to have to like fight someone over a can of rotting cat food in order to, support my family. I don't want to dig into my strategic dog food reserves. I think we need to have this period as kind of counterintuitive as it seems. I do want this to be a smooth transition. I think the longer the party goes on without like the entire world collapsing, the more people have an opportunity to onboard to Bitcoin. I've said this before, but I view Bitcoin, like, I love this country. I think America is absolutely amazing. I think the federated system, the state system that we have, it's one of the most unique things about this country. And there aren't any other places, certainly, that are as large as the US that are doing it. I think that Bitcoin has the greatest possible chance of saving this country. And I don't say that as like a nationalist. I don't identify it as one at all. But I say, like, for the entire world, I think that Bitcoin is the lifeboat. It's the thing that will ease that transition into this new period. Normally we tend to have these catastrophic sort of collapses that happen, but they happen over a long period of time. But then there's something that basically pushes us over the precipice. And as you said earlier, we're 3 meals away from revolution. I don't want to see that happen, because a lot of people get hurt in a revolution. I want to see this. I want to see the incentives change. I want to see people start using Bitcoin. I want to see people, Bitcoin is for enemies. I want to see our enemies adopt Bitcoin and have themselves be changed by that process. We also like to say, you don't change Bitcoin, Bitcoin changes you. And that certainly is very true for me. Once I understood what Bitcoin was, once I started, saving the value that I produce in Bitcoin, this is, of course, before I had the boating accident and lost everything. But it really changed the way that I viewed kind of everything. And I think even the people that we currently view as being terrible for Bitcoin, I think that there's a world where they come to understand what it is, they start using it, and then their incentives change and they become people that they're supporting themselves, support the larger network. That's the world I want to live in. As you guys know, I do have my giant wrench with the knives taped to it. That's just sort of, I like to hedge my bets. So I have that as well. In fact, I'm going to grab it right now.
I think P said it very beautifully. I think if I'm being a realist,
I keep this by me at all times, just in case.
I mean, if I'm being a realist, I'm going to take the second route that Q was mentioning, that you're going to print into infinitum to protect your interests, to protect getting your job, keeping your job, protect getting reelected, whatever it may be. I mean, the first one's definitely the way to wash out bad malinvestment. So I guess let me flip this back to you guys. So obviously we talked about the first issue is you let the Great Depression happen. We let this fiat system collapse. Second one is you print more money, you cause more hardship, probably more riots. People can't pay their bills. You have to probably do UBI like Q mentioned and all that. In a post hyper Bitcoinized world, what happens with bad malinvestment? So, we see Bitcoin's price as it goes up and then crashes down, then goes back up, crashes down. Like what happens when the world is using it as their global reserve currency? Let's not say like fiat reserve currency, but global reserve currency. Do we see these boom bust cycles faster, quicker, slower? Do they not happen? Does it only go slowly up to the right? I guess this is just theoretical, obviously, but what do you guys think?
I want to see you want to teach financial responsibility when the chicken comes to roost. I think dream scenario, not the thing that's going to happen. I think people are going to be assessed. And I do think that we're going to need to evaluate people based on the financial decisions that they were making. And that will help categorize people of your understanding of both risk and finances to then better assess going for what I'm describing is no different in theory to a credit rating. However, the current credit system is it's hackable. There are little tricks you can use to make yourself look like you have good credit and you are a worthy loan recipient when in fact the family that actually has the money to pay the monthly payment for their mortgage is a better person to be giving that loan to than the business owner who's taking a sixth line of credit out on their business because they've got this, that, or the other, but their credit score looks better. I don't want to reintroduce that. But what I genuinely want to do in that example is, this family that actually saved the right way, didn't take out too much debt, actually kept their, you guys, Chris, you know what the debt to equity ratio is for stock. Create a human version of that, an individual version of your debt to equity. And people who are highly levered are far riskier. And you fall lower on this curve of what you're afforded by other people versus those who have made sound financial decisions over the course of their lives to be given, the right opportunity. And it all can get rooted around Bitcoin through the idea that everything is a public ledger. Your UTXO validates what you say and who you are and what you can or cannot afford. But before we continue to dream our dreams, I want to point out the fact that both of you have now agreed that all student loan debt should be repaid and that UBI should be introduced for the sake of Bitcoin. So I believe my job here is done.
I'm going to have to get on my wrench again. Side note, I have close friends who their entire worldview, their entire personality has been warped by the fact that they have significant student debt. I think it's so interesting. And I don't know. I just find that fact fascinating. I don't have anything else to say on that note, but I think student debt is terrible. I also am super jealous because I gave up going to a super well-known school because I was like, I don't want to have debt. Debt is the devil. And that was a bad decision on my part in terms of using one's capital efficiently. I should have been like, motherfucker, $500,000 in student loans. Let's fucking go. So
mind you,
fuck you.
I genuinely I had 13 different colleges I was choosing from, and it was not listed anymore in an order of my preference, it was truly based on what is going to be the most expensive to least expensive based on like how much debt I have to take out. So I actually went to a school that was the cheapest. Like it would have cost me more money to go to a UC school than to the college I went to. So I made this a
You have
similar
like $12 in student debt, and you're like, oh, you're out here like they gotta forgive this stuff.
I'll admit I have $20,000 left. Like I am the
That's Q. That's actually really not that bad compared to some people that I've heard.
No, I know. Like I graduated with a very, very minimal amount. Like I blessed, truly blessed.
Hashtag blessed.
No, not hashtag blessed. However, and this is where like a lot of my liberal biases come from. I went into an industry that required a college degree. However, because there is such thing as a minimum wage at all,
Wait,
I was paid.
What?
I was paid minimum wage.
Oh yeah, but there is minimum wage. It's just fucking ridiculous.
No, but that's my point. Because it exists, because minimum wage exists, they were like minimum wage was not meant for the entertainment industry to pay assistants a minimum fucking wage. Minimum wage was meant for the lowest level employees to have a baseline to live off of. Oh, actually, yeah, I guess when you explain it like that. No one with a fucking college degree should be paid minimum wage. Full stop. Like, I don't give a shit if you think that that piece of paper is worthless or not. The amount of money and time that is spent to get that should garner a reward.
It's bullshit. It's fucking bullshit.
Damn straight. Like that is my inherent issue with like the system as a whole. Not like, oh, the student loan debt is bad or minimum wage, but no. All of these systems rely on one another and they all benefit because of that. And it just hurts me.
It's so sad to see someone who you had so much respect for, his brain just turned into Swiss cheese because of their student debt. Listeners, this is what happens.
What?
This is what can happen to people.
Wait, you have not rebuffed anything I've said after you already agreed that the government should pay off student loan debt. So
I don't have to, man. I think there's this, it's just absolute insanity. I can't even understand the words that are coming out of your mouth. I'm going to go crawl back into my cardboard box and stuff, snort some paint and, eat some cat food, as was pioneered in Always Sunny in Philadelphia. All right, we've only got 6 minutes left. Oh shit! Did a wild Alex McShane just appear? Alex, get in here!
Come in here. He heard Q talking nonsense. He had to lay down the
Get in here.
pain.
Set his ass straight.
I just want to give you a chance to hear what you just said, Q. Do you want to re-articulate that argument?
no.
All right then.
What is your counter? What point of my argument did you not like, first off?
Well, I just actually wanted you to reiterate so I could make sure I understood it before because I had a gut reaction to it. I think me and P had the same reaction, but I don't think just speaking for myself, I don't think that having done work equals value. I don't think any minimum wage should exist. Like one, because you're pricing out people whose marginal value is less than whatever you set that wage at. So you're like pricing out whole sectors of the economy that are extremely unproductive people, for lack of a better word. And then they can't develop the skills to contribute more value in some way or other. So I guess that actually is the main point that I would refute.
Fair. I mean, I personally believe that the fact that minimum wage exists is the reason why I was paid minimum wage. Like if there was no minimum wage law, I would not have been paid as little as I was, because at that point I would have an argument and basis to say, oh, I handle 85% of my boss's workload. And so therefore I'm entitled up to 85% of what they make.
But I would take issue with the language. I don't think there is any entitlement. I think you either make a trade, you're choosing the value that they're offering you. You appreciate that amount of money more than the time and the service that you're providing. Whereas your employer wants the reverse. And as soon as those are at odds, you have to either kind of renegotiate your contract or end this like free will employment. Does that make sense? So you're priced at,
Okay, you guys. Okay,
hopefully.
no, I realize that there's a key distinction in all of this. You guys are that I'm not explaining, and I'm rooting my argument around the fact that like the job I'm explaining is not just any minimum wage job. I'm specifying the role of being an assistant in the entertainment industry, where upwards of 85 to 90% of the actual day-to-day work is done by the assistants, that in no way, shape, or form are the people that are paid more money doing. And so, like, this was a discussion I've long held where the largest crux in the entertainment industry is the fact that the assistants don't feel like they have power because there's this narrative fed to them that, well, if you don't do this for this much, we're just going to hire the next person on our pile of resumes. And when you're an assistant, you believe that narrative. But then when I became an agent and I saw what that pile of resumes really look like and how hard it actually is to hire people, then you start to realize, oh, this is just bullshit. And that they are willing to pay you more money. They just have to get forced into it. And the way you force them into it is by not doing work so that they in turn realize the value of the work you are providing. Fuck you, TK.
I think that I love that we brought that. I don't see a systemic issue there really. If the interns are failing to express their value or make their value understood by their employers, that seems like a kind of like a personal problem. Like I don't see. I don't see an issue with that.
You think that's a personal problem because you haven't experienced it personally. It's a systemic problem because the systems in place have deemed that this is a narrative that needs to be accepted. Just because you haven't experienced it doesn't mean it's not a problem.
I have been paid minimum wage. That my first job, I was a baker. It was, backbreaking. I learned a lot. I loved it. But your argument is garbage.
I mean, dude, I've worked a minimum wage job at Subway as well. Like,
well,
I know that
you were a sandwich artist?
I was a sandwich artist.
I don't think like anecdotally, I mean, I've had a lot of gigs. But I think the more important question is, are you contributing more to that company than they're paying you?
My argument is yes. That's the point I'm trying to make. You're just not accepting that, yes, I was making more for the company than what I was being paid. You just don't want to accept that. The point
I accept that. That's great. I just don't see like a larger issue then.
Like the bakery job that you referenced, or like my job at Subway, there was a requirement that was not in place for those types of jobs that was in place though for being an assistant. And
there's definitely minimum wage requirements for those kind of jobs.
No, Alex, let me finish my point, please. The requirement I'm citing is the fact that being an assistant required a college degree. Working as a sandwich artist, working at a bakery did not have that requirement. And
there's a million jobs like that in the.
Yeah, I would say the degree doesn't guarantee you of any. The degree is totally useless in this day. Like you can be completely fucking brain dead and get a degree. Like it doesn't guarantee the employer that you're going to be valuable at all. I don't think. I mean, it should in certain specializations, but the vast majority of like fucking gender
studies. But if you as an employer are requiring it, if you are requiring this now, then in some degree you are accepting and saying that, hey, there was a cost to acquire this skill set or this piece of paper. And in turn, if I'm saying that you needed to go and seek this out, I believe that there should be some inherent cost on the employer that is passed down to the employee.
So you're saying if you have a degree, you should be allocated if you have to have a degree to get the job should provide a certain amount of funds for you?
That yes, to a degree, there should be we require this, so therefore we're going to pay a premium for this type of an employee. Because the truth is, dude, you could have argued.
But would you take issue with a very low premium?
I mean, the premium could be at that point based on the market deciding it. One firm can offer 50 cents an hour more. Another firm can offer $5 an hour more.
Yeah, I guess I would think that most jobs do offer that premium. They're just not expressing it explicitly. Like they just haven't defined that for you. But I mean, if they're selectively hiring people who have degrees,
I'm literally here telling you about an entire industry that does not have that. I'm explaining. I've said exactly that this is an industry that has that requirement, but does not pay that out. And
But how do you know they're not paying that price?
because
they don't have to cover the whole of your student debt. That's
no, I'm not saying
right,
that.
right. But how do you know some of your paycheck isn't allocated for that value, the value of your degree?
Because it's a minimum wage paycheck. It's no different than the paycheck that you would get if you were working at Subway or if you were answering phones for any of these agents.
Right, but minimum wage is already like bullshit. So I'm saying maybe part of that like marginal value of that minimum wage is allocated to your bullshit degree, and the other part is for your marginal like utility to the company. Does that make sense?
No.
Okay.
Well, that's time. Q, my friend, I love you, buddy, but it's a garbage
We'll keep
argument.
this debate going for sure.
We're going to
What?
cancel our next segment and just continue this conversation. Now, we've got Bitcoin Magazine Pro up next. We're going to go to a quick commercial, and then we will be back with our very own Dylan LeClair and Sam Rule. Stay tuned. Alex, as always, thank you so much for joining us. Let's hit it. Roll the tape.
What is up, guys? Welcome back. Thank you for sticking through that commercial break. Thank you for letting me go on my soapbox. I am right. Everyone else was wrong. It was all in the name of Bitcoin, so it doesn't really matter. We are joined now by none. Oh, I should probably unmute myself on Twitter as well. We are joined by none other than Dylan LeClair and Sam Rule from the Bitcoin Magazine Pro team. Gentlemen, how goes it out there, both in your personal lives as well as in the markets?
What's up, Q? Sam, how are we doing? Doing good. Had a fun weekend. Happy to be back in the saddle, watching this boring chop. But no, I'm good. Sam, how you doing, man?
Hey guys, doing good, man. Also, good weekend. Was actually outside, not really on the charts. Pretty boring in terms of price action relative to like what we got before. So, a lot of chopping, a lot of ranging, catching up on a lot of macro and kind of market stuff this morning. So, uh, feeling bearish still, but good overall.
So, what are you guys paying attention to right now? We have CPI coming out in a couple of days. Incessant contagion continuing to spiral out over in Bitcoin land, and then of course we got Fed rate hikes in about 2 weeks.
Yeah, I mean, we've focused a lot of our time and effort in the last month on the contagion stuff. We still are kind of the opinion that there are potentially some more dead bodies that have to float to shore. No inside intel kind of on that just in particular, but it just kind of what we've heard, what we've seen, and how long it took post Luna for, along with the price action going completely down. But it just seems that there's, a high likelihood, in my opinion, that there's still kind of some more unsecured credit out there, or whether it's unsecured or, loans outstanding or balance sheet impairment, all this stuff. I think there's a potential for some more pain, and that's not even really talking about the kind of the macro stuff that I'm sure everybody's has heard about ad nauseum since the start of probably Q1. Why are we monitoring CPI inflation when inflation is already known? Well, that's just the reality of how Bitcoin is traded as an asset today. And you can choose to ignore that, and that's the beauty of it. And you can stack, but the exchange rate is very, very dependent on all these macro variables. And I think in that sense, we still have a good ways to go before we are back in bull market up only mode. But I think Sam and I are in agreement there, but would like to hear his thoughts as well. He wrote a pretty good macro piece on Friday.
Yeah, yeah. I mean, Dylan are pretty aligned. I mean, in terms of like what kind of looking at just from like a macro data perspective, the jobs figures for the United States for the month of June were pretty interesting. Kind of like a surprise to the upside, same as May, like a huge surprise to the upside, which is another good indication that like we've talked about recession being this contracting 2 quarters of GDP growth, but unemployment being a big part of that. So that essentially we've yet to see unemployment kind of turn over. And that the Fed saying, hey, we want an unemployment rate essentially over 4% and that demand destruction coming in. So that's, kind of seems like that is the next dynamic or like shoe to drop and unfold over the next 6 months. Same with Q2 earnings. Got some Q2 earnings that are going to be coming out today. I think mostly some of the big Q2 earnings come out later this week and then the couple of weeks that follow. So I think that's also going to be a big macro kind of point to watch in terms of, what I think Dylan and I both think of that, earnings estimates seem to be relatively pretty high across like consensus and analysts, and those are kind of next to fall. And that's a lot of pressure in terms of like more of a profit earnings recession starting to play out and guidance going down through the rest of the year, something that we've highlighted. I guess the tricky part now is with the inflation data, no matter how you cut it, seems like we're still going to be elevated pretty strong throughout the year. Could see maybe a turning point in like what the Fed deems as the most important for them, kind of that core PCE inflation without food and energy, although that doesn't matter as much for most people. But I think the next is just trying to see if you get this larger deflationary kind of bust that plays out, which is going to be more of a shocking event to the market, I think. And, it's tricky to say, even if you get inflation to turn over in some categories and start to deaccelerate, it's still going to be upwards of that headline number is going to be like 7-8% probably for the rest of the year. So still waiting to see, maybe more towards that end of the year transition into 2023 is where you might see a larger deflationary bust. But I mean, it all comes down to, you've seen commodities fall, but also rise and jump back up. So it really is just in terms of energy shortage and commodities right now, it's hard to tell when more of those less sticky items are gonna fall and turn over in inflation.
I think it's also worth talking about, and the dollar rules all in terms of the Bitcoin exchange rate, in terms of just global markets in general. It's the world reserve currency. But I mean, it's pretty shocking when you see if you look at like the Dixie, the dollar index. I mean, the world's second and third largest currencies. Um, by just in terms of just sheer size of the market, and in terms of the the euro is an entire continent is using this thing, but the yen and the euro are just completely melting down, and that's obviously a result of central bank policy. But when you're talking about like just like I think people focus on the dollar a lot, and you could look at the BTC euro or BTC yen chart, and it still looks terrible. I'm not really kind of coming from it, like talking about it from like a Bitcoin perspective, but just in terms of what's happening around the world in these huge markets that usually aren't all that volatile. It's pretty astounding. And the euro's at I think 20-year lows, the yen's at 20-25-year lows. And eventually a strong dollar, if anyone's familiar with the kind of the dollar wrecking ball thesis, the dollar milkshake thesis, a strong dollar really kind of grinds the global economy to a halt, and eventually kind of throws the world into a recession just because of how much dollar debt is out there. And so like so many things are happening with commodities, with equities, with credit, with currencies, and Bitcoin's just kind of a small little drop in the bucket. And obviously is hyper volatile, is kind of beta on all these equities, but it's super insignificant in terms of just total size, right? What's really the seismic moves are happening in bond markets that are losing and gaining trillions of dollars of value in a day, in equities, which to a lesser extent are getting thrashed around. But these currencies, just the amount of volatility, just the amount of kind of turmoil that we've seen play out, and I think what's coming is pretty extraordinary, kind of from a historical perspective. And so that kind of just I am appreciative of where we are in the current macro environment, because it's truly historic, and I think it'll continue to kind of blow people away with how crazy things get, from all different perspectives.
I also want to go down this, fiat currency and commodities rabbit hole with the two of you for a second, if you'll entertain me. You have the Russian ruble trading at levels above it was at before the Ukraine invasion. In fact, just about 2 weeks ago, it was trading at 5-year highs. Um, you know, some just quick cliff notes for anyone who wasn't aware, but since invading Ukraine and being put under sanctions, Vladimir Putin came out and said, if you want to buy our oil or natural gas, I don't want dollars that I can't use. Pay me in rubles, pay me in gold, pay me in even Bitcoin. Um, it seems as though the market has dictated and said this is actually a positive thing for the value of the ruble. Will this be something? I mean, we're going to speculate a little bit, so please entertain me. But is this something that other countries may want to pay attention to, or what effect do you guys expect this to just have on the dollar directly?
Yeah, I mean, Sam and I wrote, and it wasn't really. It was kind of one of our largest like reports that didn't really focus on Bitcoin. I think it was February or March or maybe even April. I should know this, but we focused on kind of like the Ukraine Russia conflict and really what Putin was doing. And by no means are we like decade long geopolitical strategists. Really, we're just trying to have a finger on the pulse and see what's going on. But essentially, what we kind of from what the smartest people in the room were saying, and what we've kind of gathered was that Putin and the decision to invade Ukraine and the kind of the response to Western sanctions, it was less about territory, and it was more about kind of calling the bluff of Western financial markets in general, that were historically bloated, right? Western bond markets, Western equity markets. Putin and kind of what he's doing with global energy, and what he's doing with dollar hegemony, is was like he's been biding his time for a long time, removing dollar reserves, stockpiling gold, and then saying, all right, Europe, like if you don't want to pay in rubles, then you can freeze to death and starve to death this winter. What you're seeing with Germany, which is like the economic powerhouse of Europe, kind of just in terms of if you look at Germany's size and global manufacturing, how they kind of have backstopped the euro as a currency block. This entire time, the German bond market, just where those yields are compared to the rest of the Eurozone, which for the longest time, German bonds were actually held in negative yield because they were so much safer relative to Greek debt or Italian debt. Germany has gone from being a net exporter of goods and service of goods rather, manufacturing goods, to being a net importer because they've gone from a massive current account surplus to a deficit in just a matter of months. So it's pretty astounding just how much Putin and kind of the decisions that he's made, that the regime has made, have affected kind of Western countries, specifically Europe. And so the move to kind of say, hey, pay me in rubles for energy is not one that I don't think he's really too concerned with the dollar, or even you'll see some of the stuff talking about hey, like, we're open to accepting cryptocurrencies. I think that's more of just kind of a blanket statement. It's really saying like, hey, we're the one in charge here, and if you don't want to play by our rules, then you can freeze in the dark because you need our gas, you need our energy. And that's what most people miss, or maybe not anymore, especially as you're seeing this really start to come into effect in Europe.
Yeah, and I think you just go back to those times, just adding on Dylan's point, is where everyone's realizing after kind of this speculation bubble is coming down, and consumer spending is getting hit everywhere, and these eyes of inflation. It's all about, what do people care about most? Well, it's affordable commodities in your country, and politically, that's what you have to essentially sustain, is keep these prices stable. And to the dollar point before, being that you have this dollar wrecking ball, this DXY printing 107 on the index, 108 right now, is not just, the restrict or kind of easing from Japanese and European central banks, but it's also that those countries are huge net energy importers, and Europe's reliance on Russia. So you're kind of seeing this little bit of I don't want to use the word hyperinflating, but inflating currencies to those energy prices that are getting hit harder than the United States as well. So kind of just seeing this time where, it's hard to say from it, again, not experts in this field, geopolitical strategy, Russia, ruble, any of that. But it almost seems like pretty perfect timing of what was already primed and ready to push us into kind of an economic turning point. And now, essentially, as Dylan mentioned before, you're seeing a lot more kind of crises for the central bank start to play out, where you have European Central Bank now having to do this quasi-quantitative easing programs, or kind of roll out this new initiative where they're doing QE for parts of European Union countries, but not so much for the other ones, just to kind of help what might be a potential kind of like credit spread crisis that's playing on Italian bonds right now as well.
All of this, with record levels of inflation, and yet at the same time, you look at the Dixie and it looks like the dollar has never been stronger. What are you crediting this towards?
Yeah, I mean, it's the two biggest currencies in that measure are the euro and the yen. So it's dollar strength, obviously, dollar strength against risk, not dollar strength against commodities or consumer prices or anything of the like. But the Dixie is really just measuring specifically. I think it's euro, yen, British pound, and so all those energy importers, Europe especially, they're basically having to decide whether they want to destroy their country with austerity to maintain the value of their currency, and freeze in the dark, or basically inflate, or potentially, hyperinflate's a big word. I don't think hyperinflation, but really accelerate the inflation of their currency to kind of keep the EU glued together. It's a really ugly situation. And the Fed and the dollar for how bad of a position people say they're in, and that they may be in. They're actually the U.S. is positioned the best out of really anybody in this kind of economic shit show, for lack of a better word. Excuse my French. So I mean, the Dixie is just indicative of a strong dollar relative to other fiats, but the long term is still just with global debt levels, with U.S. federal or public debt levels, there's no way to actually maintain, austerity as a policy stance for long without the train completely coming off the tracks. So that's been Fed policy for like 8 months or so now, since the November pivot, but it's not something that's sustainable for long. I really like Luke Gromen's framing of, the Fed thinks they have a dial for monetary policy, but it's rather a switch, on or off. And right now it's switched off, and things are kind of unraveling fairly quickly. So the Bitcoin case, but really just in terms of risk assets in general, is that it's not actually possible for asset prices, and this really entire hyper financialized economic system to kind of sustain austerity for long without everything, just kind of the whole house of cards collapsing. And so, I mean, obviously there can be a lot of pain. I think we're still have some pain ahead of us. But just in terms of the scale and the scope of it, they probably don't maintain that stance for long. When CPI crashes, when equities take another 20, 30, 40, 50% down, even, all these things are on the table. Housing is probably the next thing to turn, the labor market, and that the response to actually get the can kind of kicked again, to actually get the ball rolling again, will take a whole lot of firepower. And I think that's when the next kind of risk on move occurs.
I would only just add to Dylan's point on the dollar, the DXY. I really like Jeff Snyder's framing on this, that it's real. The DXY can see and show kind of like an economic bellwether sign of how things are going. And so when you have these massive spikes going on with the dollar, not just other those currencies falling, but you have potentially this dollar shortage in the system that needs to be filled, and people moving to scramble at the same time that these other currencies are moving for energy reasons, or going down for central bank reasons as well. And so I shared a chart with Dylan earlier that we were looking at, and it's just the annual change in the dollar, and the DXY. So that being like 16, 17% now year on year change. And typically when you're getting over these 50 to 20, 25% really violent moves in just terms of how fast the dollar moves, can indicate that, here's a shortage in the market. The market is moving to try and get dollars for reasons that potentially, debt interest rates are liabilities are due, and those are coming, and people are scrambling those just because that's typically what's happened before. But those huge rate of change moves, kind of violent moves upwards, have usually marked a lot of different debt crises and speculative bubbles and recessions prior to that too. So, it's just can be a financial indicator of just the overall health right now of kind of people scrambling as the market and the macro is changing so much over the last year.
So we've talked about a lot of things now. We've talked about the Dixie. We've talked a lot about the potential CPI and the way the Fed is approaching their response. I do love Gromen's sort of analogy of, it's not this dial, it's a switch. And unfortunately they've switched it off and they don't realize it. You hear their narrative, and we've all heard a different thing Jerome Powell has said at one time or another of, we're targeting this for inflation, or it's this for unemployment. Sam, at the beginning of this conversation, you brought up that unemployment actually didn't come in at the expectations, and we might have lost a little bit more jobs. You hear it all over the tech sector, layoffs. We saw a lot of crypto companies going through it as well. Is there a specific economic indicator that each of you are paying attention to that may signal the Fed's reversal?
Yeah, I can kind of start. So on the jobs piece, essentially, yeah, although we've seen a lot on those curves, right, in like housing and tech, saying those layoffs are coming through, I think from what I've researched and read before, those are typically kind of like the first shoes to drop when unemployment goes out first. And so it's still pretty positive in terms of in job openings right now, at least like above expectations, as those kind of fall off. And so, one of those things is you could look at job openings essentially right now, where it looks at a turning point where we're going to start to see those get hit a little bit harder. I think one of just the easiest economic indicator that has been pretty proven through the cycle and a lot of people pay attention to is just the acceleration and contraction of the PMI. So, right now we've had PMI that goes from kind of 63 across the manufacturing and services sector, come down to 53, which is still a positive, kind of sign. Below 50 is when you get into real contraction territory. And so from like all previous cycles with these huge economic turning point cycles, you really see PMI as a kind of purchasing manager index, this index of this survey of people going out and trying to understand of people who are making these kind of microeconomic decisions. What are the input and labor costs? What does employment look like for them? What is the productivity that's happening? A lot of metrics that go in there. So typically you see that as a leading indicator of where we're heading next. So we've been on this deaccelerating trend through the cycle. And typically where you get the most kind of pain in financial economic cycles is when PMI goes below 50. It's deaccelerating in that 40 range. And then essentially like you're looking for a turning point after all that economic pain has gone out. So that's one in particular I keep kind of close watch on. I think job openings relative to expectations. A lot of the unemployment metrics now are going to be interesting to watch as the Fed, like I said before, is essentially wanting unemployment to go up. So I think before they even try to stop tightening or reverse that, they're going to want to see unemployment jump up at least by another % or so. So those are good ones. Small business index for optimism and sentiment is nice. That's from NFIB. And then, we've talked about consumer sentiment as well, kind of reaching all-time lows just over the last couple of months. So those are some of the ones that I kind of put in a bucket and pay attention to a decent amount.
You want me to? I mean, I guess we've covered it a little bit, but just in terms of like, economic stress, the Dixie, if you're looking at the bond market, which is, the kind of the big mover behind the scenes, bond market volatility. If you have TradingView, just look up MOVE. That's at highs. That was basically peak coronavirus. So, the biggest market in the world has, the liquidity that it had, is moving like it did during peak drawdown, March of 2020. The VIX is a lot lower than that, but I certainly think that the VIX, the equity market volatility, soars higher. In terms of Bitcoin, we've seen, probably in absolute terms, we've definitely seen the largest capitulation event ever. In relative terms, it's up there. In terms of, I think March 2020 in relative terms was more severe and it's happened a lot quicker. But just if you take, total open interest across a lot of these, futures, derivatives, contracts, and what we can't see, what's not transparent, like the open interest statistics, is the kind of the off balance sheet or the balance sheet stuff between the creditors, between the lending platforms, all of that. If we just kind of just take all of that, put it together, and just look at the forced selling that's occurred, we've seen a massive capitulation. Like that's already occurred. The question in terms of where Bitcoin bottoms, and the reason we're talking about currencies and bonds and credit spreads and all the like, is that it's very, very hard to say, hey, Bitcoin's bottomed 17.5 or whatever it is, 20K now. That's the bottom. We're going to stagnate for a while, but it's up only from here, when the worst is probably soon to come, or hasn't yet occurred in legacy markets. It's basically impossible for Bitcoin to catch a sustained bid. If we see equity market volatility increase, if we see the Nasdaq, the S&P 500, take huge moves lower, and so Bitcoin has, for better or worse, never seen a recession, and so there's just a lot of factors, a lot of variables at play here, which is why I think from a capitulation standpoint, we've seen most of the kind of the downwards move, whether we go from 75% from the highs to 80 or 85%. I mean, that's certainly possible, but I think what people aren't prepared for is the capitulation that is yet to occur is a time-based capitulation. So we've seen the price-based capitulation, at least the dominant majority of it. We could certainly go lower. I mean, 15K, 10K. It's always possible for Bitcoin to draw down another 50%. Like, don't rule that out. But the real pain is that now we're at $20,000. You have miners at hash price near 2020 bear market lows. they're going to, be forced to sell more of their coins. Retail interest is obviously not here. The plebs that arrived in 2020, or really anybody that's been dollar cost averaging over the last 4-year period, they're underwater. So there's a whole lot of kind of things that have never really happened before at once in Bitcoin's sense that are all occurring at once, which is why max pain. We felt a lot of it, right? The market's absorbed a whole lot of selling, but in terms of just calling an absolute bottom, and by no means are Sam and I, so-called like the oracles here that are going to call the bottom, at the exact tick or the candle wick, but just it seems, just based on all the things that we're looking at from a macro view, it'd really be hard to say that the generational lows of Bitcoin are in. Would I be pleasantly surprised? Yes, but just don't, just a little bit of realism from our end in terms of saying, hey, it's probably a little bit more pain to come, whether that's time based or price based, in a move lower. We've yet to see.
I wish it went without saying, but as a very direct reminder, please do not take anything being said here in this segment or at any point on today's show as financial advice. Do your own due diligence. If you're listening to a bunch of talking heads online and basing all of your financial decisions off of that, you're a fucking idiot. So do your own due diligence. Look, I'm a little disappointed, Dylan. I did expect you to tell me the exact, all the way down to the sense of what the Bitcoin bottom is going to be. So a little disappointed that I can't ask you that question. What I will ask is just sentiment for, all right, just bear with me because I'm going to ask you the stupid question that you hate me asking, but you brought it up at the beginning that we've seen this correlation with the markets and there hasn't really been any inclination that we've broken that. Can you give an example of what a sign that the correlation between the equity markets and Bitcoin has broken?
Yeah, I mean, I think necessarily that the correlation is not going to disappear, or I think it remains for a long time. Bitcoin is just kind of like everything, for better or worse, is a function of the liquidity tide. It's just a matter of what performs best. Bitcoin performed best this last kind of credit cycle. I expect the same the next credit cycle. And I think the moments of decoupling aren't going to be something that occurs over a 6-month period. It's going to occur, on a daily time frame, or over a couple hours, where Bitcoin is up 25% because everyone is squeezed from shorting it, and equities are doing nothing. Like we've seen that in Bitcoin's past. If you look at the break from the last range from the bear market, Bitcoin's at $3,000 for 4 to 6 months or whatever it was. All of a sudden, it pumps 35% in a day, and triples over the next month, right? Like these are that regardless of what the equity markets did, Bitcoin was pumping like crazy. And so I think in terms of decoupling, that's what's probably going to take place. Kind of Sam and I are of the opinion that after the brunt of the spot selling has occurred, whether that's today or a couple months from now, or whatever it is, it could be a lot lower. It could be a 15K, 10K, whatever it is. You're going to see a lot of the derivative market short Bitcoin into the ground. The bears have killed it over the last 8 months or so, and have done really well shorting it. But shorts like to pile on at the bottom, and every really kind of macro Bitcoin bottom that we've seen is characterized by persistently negative funding, futures, and backwardation. So like say the August or September 2022 Bitcoin futures contract is trading below the current spot price. You see just like all the shorts pile on in futures, and you kind of see from there like the huge moves upwards from the bottom of all the bear markets. Say like if we're going back to the 2019 example, when Bitcoin is at 3.2 and it shot to 4,800 in a day, right? Like a 25% move upwards or whatever it was. That wasn't like a whole bunch of spot buying. That was a mechanical move, and it was shorts actually covering. So like really no one bought spot there, or like not significantly more than they did for the past 3-4 months. the move was a whole, tens of thousands of Bitcoins worth of short interest that had to force buy higher. So I think that's probably what you see when you're talking about a decoupling. That's where Bitcoin decouples for short periods. But I think it's quite natural that Bitcoin is kind of like a functioning as a quasi equity instrument. It's a debasement hedge, similar to equities. It's like, and that's different, I should say, than an inflation hedge. People are like harping on, hey, Bitcoin's not an inflation hedge. I don't think it ever was. I don't think it ever was a year over year CPI inflation hedge. Bitcoin and kind of the year over year change in rates or the year over year change in inflation is not a great relationship. What Bitcoin is a debasement hedge against perpetual monetary expansion. In my opinion, it's an alternative system. And so I think, even if it's correlated with equities, equities are in nominal terms, I believe, going to continue to melt up, even though we're 30% or 20% off the highs, just based on how our system functions. The fiat monetary system requires credit expansion to sustain itself. So Bitcoin being correlated to equities isn't a bad thing when equities melt up, a majority of the time by design, right? I guess that's just my 2 cents.
I always love your 2 cents, and thank you for entertaining me with that response, Dylan. I know how much you hate when I ask that question. So, I want to talk now a little bit more about just what you're seeing on chain. If there's any figures or any numbers in particular that are causing you concern or excitement, and I'll go first. And one number that was shared last week was the amount of Bitcoin that moved off of exchanges into cold storage wallets in June was a record, I believe. I say this in front of the two of you in hopes of either being validated or being called a complete buffoon for saying that. But these sound and read to me like a very positive sign that the ecosystem, the network holders are doing the things that need to be done, and price does not matter. Everyone's taking the right steps to move us forward. Are there other such things that you guys are paying attention to that are actually, further validating your belief in the underlying thesis that Bitcoin is the best and soundest money out there?
Yeah, I mean, the exchange balance statistic you referred to is correct. In month over month terms, I believe it was the biggest month ever. And I don't have the number off the top of my head. I believe it's like 100,000 Bitcoin or so that were taken off exchanges over the trailing month. I think it has less to do with market exchange rate pricing and more so just with the kind of the contagion we saw, right? It's just like a bunch of counterparty risk. Why even risk having any value on exchanges? And so that's a good sign. It's positive. I mean, over the long term, less and less Bitcoin on exchanges, on the margin, is good for the exchange rate. On the shorter term, I don't think it's all too significant. In terms of other on-chain metrics, and I'll hand it off to Sam in a sec, but I think one of the ones that we like to cover, it's very, very basic, and it's just a great kind of map of the Bitcoin cycle. The bull and bear cycle is the realized price. It's just the average cost basis of all Bitcoin holders. You see during a bull market, the market price is 2 or 3 or 4x larger than the kind of that average cost basis. And during the depths of the bear market, it actually falls below it. So the average holder in aggregate on chain is underwater, and we're there today. So that average price, that realized price metric is at 22,000. Bitcoin's at 20,000. So on average, the average Bitcoin via the price it last moved on chain is underwater. And so we've seen that with every single bear cycle. That was around 4K in 2019. And the realized price continues to just kind of bend upwards with every bull and bear market, and the hodlers distribute at a loss or at a profit, right? So very natural. Like, I mean, in terms of like if we strip away all the macro stuff, right, and if you just looked at the data, if you just looked at the Bitcoin chart, the drawdown from all-time high, this is like a pretty standard Bitcoin cycle. It was kind of different in the sense that there was a double bubble from 60K, drew down to 30, went to 69 again, and then fell down to 20. But in terms of like the mechanics of a Bitcoin market cycle, it's not all that different. We just have kind of a different backdrop. So I guess that's what I'll say from the on-chain side of things. But I'll let Sam hop in here and give his input.
Yeah, thanks. I mean, to the exchanges point, I don't think that's obviously not a coincidence. I think it was, like Dylan said, 100,000 is probably like 120, 130,000 Bitcoin that left exchanges over kind of like a 30-day sum, or you can also look at it just as like the month of June. Definitely was like the top historical month there. I think as for price goes, I think we've written some pieces before and put some information out there. It's hard to see exchange balance having like this short-term price effect. So I think people get, excited about that and thinking that there's going to be some price rise. I think it's just more of a telling trend of where Bitcoin is going, and an assumption for a long time has been. I think it's a good one broadly to say, hey, likely some of this or majority of this is going to some other custodian or long-term storage. There's also other products on the market that are non-exchange Bitcoin that Bitcoin winds itself up in. You can see stuff like that in like wrapped Bitcoin on other chains as well. It's got kind of 240,000 out there, I know, just on Ethereum. So there's other places where that ends up. So it's not all going to cold storage, but I think it is telling sign of that is the highest outflow month while this contagion happened. I think in terms of like how I look at a lot of on-chain metrics right now and trying to think about them is, one, I think you have a lot of the classic kind of like cyclical or mean reversion metrics that people have cited before. So MVRV or like MVRV Z-score, kind of that price over realized price Dylan was talking about, is a very popular one. You have activity, essentially like the value of the network relative to activity. You have some reserve risk, which is more of kind of like reserve or maybe like risk allocation of right now. Should you allocate or should you not, based on what holders are doing? So if you look at all those, they're like very low percentile, very low cyclical kind of metrics right now, would tell you that right now, relative to these trends, relative to the few cycles we have, which is small sample size, that Bitcoin, if you're looking at on 3, 4, 5 year time horizon, is incredibly pretty cheap. But I think with Dylan's point on the macro side, ones that I lean into a little bit more are kind of like looking at duration of what we would say like capitulation is. So we obviously had some capitulation signs, some forced sellings, and liquidations, and kind of you can see some of that in on chain. So one of those is looking at kind of the net unrealized profit and loss on the market. So you're looking at the percent of how much of this Bitcoin from holders is at a loss now. So, when you have something of like 30%, or the Bitcoin that's being held is at 30% at a loss, that's kind of this capitulation type event that we kind of gone through. But there's a duration component, as Dylan mentioned before there. You kind of have these one-off events, but a lot of these bear cycles are drawn out. If we hit lows, we can hit lows again. We can hit lows below those. And I think the biggest thing for me is kind of looking at the long-term holder cut of on-chain and saying, of the people that maybe have been in for a few years, a couple of years holding their Bitcoin, I think on net, their average price is around 22,000 right now. So we've only seen price sit below that average price for a very small amount of time. And typically in bear cycles, we see a long duration of that. We see price it below their cost basis of the network. Just kind of telling me that it's possible here that long-term holders, people have been around for a little while or holding their coins longer than 6 months, is the kind of technical definition from Glassnode, is that maybe there's not enough pain felt here that has been in previous cycles before. Obviously that can change cycle to cycle, and there's only a few cycles to compare, but that would tell me that there's like this duration component that, maybe people are tending to kind of feel a little bit more pain here. I think there's the kind of relation as well. We saw some larger miners selling a decent amount of Bitcoin over the last month. I saw an interesting point today from Joe, which is at II3 Capital on the Blockware team. He had put out kind of an estimate that a lot of pain could be sitting at for a hash rate around the network at around 10,000 right now too. So just an interesting price point. I tend to look at, kind of the duration component of these bear markets, and in a lot of way you cut it and look at it, just seems like there could be a lot more pain ahead, or at least this could be drawn out whether we hit the lows or not. So I would just prepare people for that scenario.
So I worked on phrasing this so it's not a speculative conversation. We've talked at this moment about how there are a lot of people underwater A lot of people buying Bitcoin all the way up to 69K, myself included, riding it all the way back down, continuing to stack. But it's not just individuals. You have publicly traded companies that also bought at certain levels and are now underwater. Two great examples are MicroStrategy, that started buying as early as the summer of 2020, but with their add-on buys is now underwater, or a company like Tesla, with their initial purchase being completely underwater at this point. Unfortunately, not every single one of these publicly traded companies has a CEO with the same amount of conviction as most of us do. There is a possibility that Tesla board turns around and tells Elon, like, yo, this Bitcoin experiment, no more of this, be done with it. What effect, if any, would the market would something like a Tesla unloading their Bitcoin holdings have on the market and the confidence of Bitcoin? Price obviously would get hit for a little bit. But
Yeah, I mean, Q, I think you could probably answer that, man. I mean, it'd probably be bad, like in terms of the exchange rate, in terms of Bitcoin's track, or what it actually the network is doing. It would have no impact. Blocks would continue to be mined. I think just in general regarding like public companies or institutional interest in the space, there is long term. We're gonna be fine. Not we, I guess, just Bitcoin is gonna be fine. It's gonna continue to work as designed, and the kind of the game theory and your own self interests of around an absolutely scarce monetary asset will draw people in. But there is a pretty severe problem with just over the last 2 months with the amount of, just being blatant, and we've covered this, like, I think the last time we talked, Q, on Spaces and on YouTube, just about the legitimacy of this space, and the amount of sheer fraud and honestly like Ponzi's around the space. Obviously, that's not a knock on Bitcoin, but the actors around Bitcoin and using Bitcoin. Right. If we're looking at Celsius, it looked as if, based on the lawsuit that came out, that they were legitimately running a Ponzi scheme. They had liabilities denoted in ETH and other cryptocurrencies that they just didn't hedge. They were speculating in DeFi land, and had liabilities denominated in things that increased by an order of magnitude and had to cover. And so they, basically starting in I think around early 2021, Celsius was running a Ponzi scheme. The whole Luna UST thing, with all the so-called experts in the space championing that, taking their treasuries in UST, investing in Luna, right? Everyone knows the infamous Novogratz tattoo. Like, so it just, I guess what I'm getting at is the so-called smart money in this space has, pretty big black eye on their face over the last couple months. And so from an institutional perspective, when we're heading into a recession, anybody with a brain and two eyes can see that a recession is coming, and global economy is not in a good place and is continuing to deteriorate. Interest in Bitcoin, which despite what a lot of the people, including myself, champion as being the best money ever, have been having the best monetary properties, and over the long term being just a superior monetary asset compared to any other currency or asset on the planet in human history. The reality is it's served as basically NASDAQ beta with added with added risk of illiquidity to the downside. And so from an institutional perspective, in 2022, summer of 2022, you don't obviously the plebs and anybody that's on an individual scale, or that owns their small business, or say there's another Michael Saylor out there with a publicly traded company with all the voting rights, you can do what you want. But from an institutional perspective, from a board perspective, companies aren't going to, at least for the time being, until there's some regulatory clarity, they're not touching this space with a 10-foot pole. And that's great for anyone that's looking to stack cheap sats. Keep the institutions, keep the suits away, no ETF, etc. Right? Like, soak it up and stack 20K Bitcoin. If it goes lower, great. But in terms of the quote unquote sophisticated legacy participants coming in here after Celsius, Luna, UST, Three Arrows Capital, Voyager, the list goes on. yeah, it's just not happening. So like, not to be a pessimist, it's just, that's just the reality of like, these legacy participants coming in here and stepping in when they're having, to be told to go risk off in the legacy world. Never mind, entering a position on a 80 vol asset like Bitcoin or whatever it is. So whether it's MicroStrategy or Tesla or whatever their cost basis is, or they're underwater, I mean, sure, like, there could be another publicly traded company that adds some more Bitcoin, but the accounting rules aren't favorable, and just there seems like there's a whole lot of just kind of regulatory uncertainty. And for someone like me, like, I don't care what Gary Gensler says about Bitcoin. I'm gonna buy it. I'm gonna hold it. But for someone that's has to respond to shareholders, has to respond to a board, etc., like, it's just not a great time or optimal time to be allocating to the space, even if it's in their interest in the long term. So long-winded answer, but that's what I kind of believe.
You were flatly wrong, and I could not have answered it as well as you. So, boom, there you go, Dylan. Before we wrap up, I do want to give you guys each a moment to just share anything else that you guys are seeing or paying attention to that we didn't get a chance to discuss right now.
Yeah, I guess I can wrap it up with saying that we're covering more of the stuff that we talked about today in our daily research. Bitcoin Magazine Pro. We kind of just put like visuals and kind of graphics to some of the stuff that we've been talking about over audio today. So if you're interested in that, check it out. And appreciate everyone tuning in. I don't really know if I have any more to add, but I'll turn it over to Sam.
Yeah, no, I would just add one more kind of thing. I think probably the most interesting thing right now in the space, and where we're going to be trying to maybe put a little bit more research efforts in over the few weeks, kind of digging more into balance sheets, is kind of where these public miners land in terms of some of the debt they've taken on in their collateral with machines, collateral with their Bitcoin. Kind of looking at some of these monthly production updates, kind of month on month, seeing what happens here. I think maybe we've seen like the start of some minor capitulation at some level. Now, again, we're going to see kind of the duration of price play out and how long kind of some of the miners in the network can withstand this. Because I think right now at the turn of the year, a lot of people were hoping for or forecasting out 300 exahash in hash rate. And we're at, although up on the year, I think 20-30%, we're about 205 right now. So I think the next big thing is seeing how much hash rate potentially comes offline from kind of capitulation on the network right there and a shakeup of things. So definitely going to be covering that more. Like Dylan said, check out bitcoinmagazinepro.com if you want to sign up as a free sub to check out some of our research once or twice a week.
Cannot overestimate this enough, but if you are someone who does pay attention to the price on a daily, if you check the price on a daily basis, you should be subscribed to Bitcoin Magazine Pro, because there's no better people to break down what's actually going on and separate the noise from the signal for you than these two gentlemen right here. So it's a free subscription. Do it. Just do it. And while you're at it, make sure you subscribe to the YouTube channel. Thank you to everyone who tuned in on the Twitter Spaces. I'm going to just stop talking and we're going to close that room out. Maybe P will come back on camera. But before we wrap up live, I do want to remind everyone the tickets for Bitcoin Amsterdam are on sale right now. So be sure to lock in your tickets. Ticket prices will be going up, I believe, in 2 weeks. Oh, I'm muted. Was I muted this whole time?
No idea.
Oh, that sucks. That sucks.
Only the last 20 seconds.
Did I at least shill Bitcoin Amsterdam?
I think you did.
Okay, cool. Locking those ticket prices, it's going to go up in price. And if you have not already gotten the print magazine, make sure to go get your copy of the censorship-resistant Bitcoin Magazine print mag.
It's fucking awesome. Thanks everyone for listening. Again, apologies on the technical difficulties we had with Greg Foss's internet. He loves all of you. He asked us to apologize. We're going to have him back on in full high def, super high speed internet directly into the back of your brain. Well, not that last part, but you get the idea. We will see you tomorrow. We've got an incredible show, or series of shows. We've got Evan Kalutis of Zeus Wallet. We're going to be talking about the Lightning Network. It's going to be dope. We'll see you then.